very good morning to all of you. As I said, let's take a look at where the markets are right now. And you have declines once again, but they're capped at about 0.2% for the benchmark Nifty 50. It's been 3 sessions in a row of losses for the benchmark Nifty 50. And for the month as a whole now, the Nifty 50 down about 3.5% or thereabouts. If we can pull that up. Yeah, there you go. So close to 4%. After, if I'm not mistaken, 4 months of gains for the benchmark, you are losing about 3.5 to 4% at this point. And it's quite interesting because if you look at the performance of the Nifty 50 in July's over the course of the last several years, then you will notice that there are gains in most of them. The average 10-year monthly return for July is better than any other month. It's at 3.5%, but we're looking at declines for the month of July. But let's take a deeper look at where the markets are right now. And the mid-cap index just about flat right now, recovering from the low point of the day. You have the small-cap index that's down about 0.33%. And so I'm curious about the advanced decline ratio, or the market breadth, where in trade yesterday it was very, very sharply tilted in favor of the declines. It's been a chop and churn today, where you've seen that pull and push and the tug of war take place between the advances and the declines. Let's pull up the sectoral movers very quickly and talk about what's moving today. Realty, which was a stark underperformer in trade yesterday, is up about 1% in trade today, and the defense pack continues to lose ground. Of course, today Mazagon Dock Shipbuilders is one of the stocks that is underperforming on the back of numbers. You have Paris Defense as well as Zentech, Mazagon losing about 4.5% or so, and quite a few stocks reacting to numbers as well.
Absolutely, and for Paris and Zentech especially, it's the second day of trade where they're seeing significant pressure. Paris Defense was locked in lower circuit yesterday, down by about 10% yesterday. Today down almost 6%. Zentech also down 5% there. Some other counters that are also buzzing in trade. If we can try to pull up the BSE 500 and see. Zentech locked in lower circuit, as I mentioned earlier. There you go. The counters like Lakshmi Organic on the back of earnings. Home First down 5%. IEX still seeing pressure. There was one day of good gains because of earnings probably, but seeing pressure down by about 4%. Tata Chemicals, good set of numbers, up 5%. Rallis, JB Chemicals, GSFC are some of the counters doing well.
And beyond that as well, there's one stock that I had pointed out this morning that looked really good. Of course, it is seasonal. Paradeep Phosphates,
yes.
And it's up 13%. What a strong set of numbers that this company, 14% at this point, and 3 quarters of strong performance is what this company has posted. Remember, it is in the fertilizer space, but in the non-urea space. So as the name suggests, it is a manufacturer of diammonium phosphate. Apologies, so that's DAP is what it's called. It is the pricing of DAP has actually been something of a focus point for a lot of researchers heading into this season, and that bodes well for this company as well as a couple of others. Let's get in our experts. We've got Asa Jain, who's a senior research analyst at Haim Securities, as well as Swati Hotkar, AVP Technical Research at Nirmal Bang. Ladies, thanks so much for joining in. Good morning to you. Swati, I'll very quickly come to you, because we've seen quite a bit of selling pressure come through over the last few trading sessions. I'm just wondering whether you see that some base is forming. There is a possibility of a bounce back from this point. Have we reached oversold zone, and specific stocks that you see opportunities in right now? Swati, you're on mute.
I'm really sorry. First of all, good morning, all of you. Yes, from the last 3 days, we was continuously witnessing a selling pressure on the Nifty as well as on the Bank Nifty front. Now, if we look towards on a larger degree on a weekly chart, if we draw the retracement from the all-time highs towards its previous lows, then we have retraced already 61.8%, which is the golden ratio of the Fibonacci retracement, and the support is formation at around 25,540, 500 level. That is a very strong support levels, and Nifty has almost touched that level, and we are witnessing a bounce back rally. I believe 24,500 will act as a crucial support levels, and we will see some turnaround back towards to 25,000 levels, which will hit the 50 days moving average. So up to that levels, we are likely to witness a bounce back rally. So this is the very quite decent levels to build up the long positions. So my view is definitely positive, and buy on dip strategy should be implied in these particular markets. Stock specific, yes, definitely two counters are really looking very positive on the technical front. One is the Hero MotoCorp. Already we have seen a very huge sell off in this particular stock, and on a larger degree on the weekly chart, the counter has given the formations of the rounding bottom, and after the rounding bottom formations, we have seen a consolidation phase. So the risk reward ratio is really favorable at the current market price. 4,300 is the rate as of now is going on. I believe the stock has a potential to reach up to 4,400 to 4,450 levels. So this is the one counter definitely one should keep eye on it. And another counter is looks positive on the technical front is the Asian Paints. Yesterday, the counter has shown a very strong formations nearby its 50 and the 100-day moving average. It has maintained a positive closing about the same levels, and we are likely to witness the up move rally towards to 200, which will take a counter towards to 2,400 to 2,440. So these two counters looks very positive, and one can definitely keep on radar.
All right, so Asian Paints also in focus on the back of earnings as well. Keep that in mind. But primary markets are they are on fire because a new company which will make the D Street debut, Lakshmi Finance, is something that my colleague Sajit Mangat is talking to the management about. And let's cut across and listen to what they have to say.
With 158 touch points where we open our branches directly, we hire our own sales team and onboard customer directly through applications which we use for onboarding customers.
Your operations are primarily in the central India and I think western part where Rajasthan, Gujarat, Madhya Pradesh, Chhattisgarh, UP. How do you see the financing environment in these states, especially with respect to MSMEs? Because we've seen large banks, private sector and public sector talking about a stress which is there in this segment. And since 80% of your loans or assets are into the MSME sector, how do you see that?
See, we are into rural and semi-urban areas where we take documents as a security from them. So we are 198%. Our book is secured by collateral. So these collaterals are like residential or a commercial properties, which we take from the customers as a security and keep our LTV to 45 to 50%. So our credit checkpoints, our risk management, and our way of credit is very different. And our customer base are very, you can say, small ticket size loan taker who use this money for end uses for business expansion. So we take Udyam Aadhar from our customers who that shows that they are MSME customers, and that is the consumption of money is for business expansion. So in this rural and urban areas, so these guys are like Parchun ki dukan, tent house, stationery shops, sweet shops, and dhabas. So these are the guys who are taking who are taking from a loan from us and for the business expansion and and getting the complete family into the deal. So still in rural areas when you fund, that's the best part कि अभी भी वहाँ पे joint family system है. So complete family like father has a two son, their wives, mother, everybody has comes in the deal and everybody is contributing towards a EMI. So.
All right, so that's the management of Lakshmi Finance. The IPO is currently open. Watch out for that. And there are 14 IPOs that are going to be open this week and 12 listings that have been lined up for this week. And so what Mahima said is exactly right. The primary market is on fire. But let's focus on the secondary market. And we've got the first question today from Pavan Kumar, who's writing in from Bengaluru and asking about Texmaco Rail. Bought at levels of 156 rupees per share, 755 is what he's holding. He's wondering whether to hold or sell at this point, and if the recommendation is to sell, what would you suggest that he go into otherwise? Asa, what's the view here? And good morning to you.
Hi, good morning to you. Indeed, Alex, it's a busy week for primary markets because so many IPOs are coming. So you're absolutely right. Now, talking about Texmaco Rail, yes, what we believe that it is a hold from our side because we find that the order book is strong and going ahead might be we can see some sort of improvement in the margins, not maybe in this quarter, but I think over the period of a time of 1 or 2 quarters, the company will be able to post strong margins. So my idea here is to stay invested in this counter at least for coming 2 quarters, that is 6 months time horizon. So hold is a strategy from my side for this counter. with a price target of 180 at the initial levels.
Okay, hold is the view on Texmaco, is what Asta is saying. All right, the next question is on Indian hotels. Now, Soumyadeep Chaudhary from West Bengal is writing in and holding 500 odd shares, bought at 749 a piece, sitting on a loss of 2,000 odd rupees right now. Wants to know if we can continue to hold for the next 3 to 4 odd months. Swati, I'll come to you on the charts.
Yes, Mahima, one should definitely hold on at the current level because I believe that the stock has already seen a very strong retracement. It has formed a double bottoms in nearby 720, 730 levels, and we are likely to witness a upmove rally towards at least 200 DMA, which will take a counter to 770. So one should definitely hold on the long position by keeping a strict stop loss of a 720 for a target of 770.
Okay, all right. So that is a view on Indian hotel. Seema has got the next question asking about JSW Energy. She's bought 50 shares at a price of 707 rupees and asking whether it can be averaged at the current market price. Is this a good pick in the power space or should she shift to something else? Asa, there are several names in the renewable energy space and there are more names beyond this as well, even in the ancillary space. What is your view on JSW Energy though?
So the JSW Energy, I think the results will get announced on 31st of this month. So our view is positive, at least till 31st, one should definitely hold this counter because what we believe, and this is what our expectation is that the results going to be strong for this counter. Now in the energy space, what we are seeing that this company has got a very, very strong execution capabilities. And in fact, what we are seeing that this company has got, some sector leading achievements. So my idea here is stay invested or hold this counter at least till 31st because what I'm seeing right now is the 31st is the date on which the results will get announced. So wait till the 31st and definitely a hold from my side with the price target of 550 to 570 if results they deliver will be on the expected lines.
All right, so continue to hold JSW Energy. Viewers who are tuning in, you can also call us on the numbers that are flashing on your screen right now, the landline number as well. All right, the next question is from Tarun, who's writing us and wants to know about Jupiter Wagons. He's sitting on a loss of 6% is what he's saying. He's holding around 150 odd shares and wants to know if he can continue to hold or sell at this point. Swati, I'll come to you on this one. What are the charts indicating for Jupiter Wagons?
This particular counter is already trading in the nearby the oversold zone and we are continuously witnessing some sort of a selling pressures. But I believe this is the probably it will find out a support nearby 330, 325 levels and we can witness a turnaround. So not to book the losses at the current market price, definitely a bounce back rally can be seen towards at least 370 to 380. So sell on rise strategy should be employed at the current level. You can definitely hold on the counter.
Got it. Okay, so let's take the next question. It's from the Realty Pack, which has been under a little bit of pressure. It's bouncing back today, as I pointed out at the start. It's one of the top gainers, and Oberoi Realty is one of the top gainers, gaining about 1.7%, but quite a bit of ground lost over the past few trading sessions. And Gerard Joseph, who's writing in from Chennai, is asking about this. He's bought Oberoi Realty at a price of 1,889 rupees, so losing a little bit of ground right now. He's bought at elevated levels. He's looking to hold for another 2 months, so wondering whether to exit at this point and book his losses. Swati, what's the view? It's lost quite a bit of ground very, very quickly, but is there potential for a bounce back?
Sure, Alex, because already we have seen a profit bookings at the higher level of 2,000 and up to 1,600 we have seen already a downfall. Now the counter has entered into the oversold zone. So the downside is limited. Maximum up to 1550 levels can be seen and there onwards we can witness some bounce back rally. And the bounce back rally is likely to be continued towards to 1,800 resistance provided by its 20 DMA. So I believe one should definitely hold on the current long positions at the CMP. Initial targets will be 1,800 and beyond that levels 1,860. 1870 levels can be seen. So you can hold on your long positions.
Got it. All right. We've got a caller on a stock that has been absolutely trounced in the recent past, and that's because of a change in the regulations that have come through. Rajesh is calling us from Hyderabad. Rajesh, very good morning to you. You're talking about IEX. What would you like to know?
Yeah, will it grow or it will be stand on this line only? That is what I want to know, because it is suddenly got down like anything, no?
Yeah. Did you by any chance read the update on market coupling that was announced on IEX?
Yeah.
So that is the reason, Rajesh, why the stock has been hammered in the recent past, because the interpretation of that is that the pricing control that IEX has had in the power trade space is going to be taken away, and so therefore that could have implications on its operations. And the most recent brokerage note, I can't remember exactly who, this morning had a note out with a target price of 99, because that coupling issue is something that has, according to them, broken the model for IEX. But I wonder, Bernstein was the one that said that 99 is the target price that they have with the sell recommendation. But Asta, on the fundamentals, it's already given up quite a bit of ground. He's bought levels of 231. Is this a broken model, or do you think that there could be a recovery from this stage?
I don't think so that recovery will be there actually sooner, because what we are seeing is now the company has got certain issues, and now some pending results will be there. Definitely they will be challenging the order, etc., etc. So for the time being, I think this stock is not looking so great, and there is uncertainty. So my idea here is just to make partial exit, not at the present level. Maybe in any case, if the stock rises till the level of 140, 145, then make partial exit and invest in any other good quality stock, although he will yield some losses right now by exiting from this counter. But definitely, I think there are a lot many options in the secondary market which can definitely yield good profits to him. So start making partial exit from this counter, because even I also feel that coming months will not be great for this company, because they will challenge the decision, and definitely all these things will take a lot of time, and uncertainty will prevail.
Thank you so much for that, Astha. Just to add to that, we were just discussing, because if you've been holding IEX from a short-term perspective, that's I think 15 months, if I'm not, no, 12 months. 12 months, then short-term capital loss will be applicable, and that you'll be able to set off only against short-term capital gain. Short-term is only both. Okay, short-term and long-term capital gain. And if you've been holding it from a longer-term perspective, then you'll be able to set it off against your long-term capital gain. So you'll have to keep that in mind as well. And of course, up to 1 lakh of your capital gains are non-taxable. So keep that also in mind. All right. So that's with regards to just a quick detour on talking about how you can manage your taxes as well while selling your stocks. But moving on, the next question is from Ajit, who's writing us from Cochin, and his question is on Paras Defense. Asta, I would want to come to you on this one. He's holding 91 odd shares, bought at 860 a piece. It's interesting because the earnings came out in the last minutes of Friday trade. The stock did not react much on that day, but Monday we saw it was locked in lower circuit. Today also it's down almost 6% as we speak. What is your reading with regards to where the numbers stand, and what do you think? Should he continue to hold?
So yes, what I think that right now, this quarter is not so good for all the defense companies, and majorly what we are seeing is that the results are not up to the line, or they are not at the par. But I think going forward, maybe 2 quarters down the line, these companies will able to post strong numbers. The reason being the kind of order book they have now started getting in, that will act in a favor for these companies, especially when they will post their financial performance. And going ahead also, I believe that the industry tailwind will also be there. So my idea here is that yes, due to the poor financial performance, this stock may see further downside. But in the longer term, one should remain invested in this counter, because I believe that defense is the space which is a long-term story. Maybe in the short term, we can see some sort of downside momentum. So stay invested in this counter for the longer period of a time. And the price target which can be set for this counter at the initial level is 700 to 720, because the results are not up to the mark. So we will not be able to see a major upside, at least for coming 2 months.
Okay. Okay, so that's the view with regards to where Paras Defense stands. Our next caller, Sanjay, is calling us from Bengaluru. Sanjay, hi, a very good morning to you. How can we help you today?
Hi, ma'am. Good morning, ma'am.
Good morning.
Ma'am, KPIT technology in 400 quantity, in average price 1,300. Correct loss, ma'am, 40,000 loss, ma'am. Short term 3 months, ma'am. Please technical analysis, ma'am. Sheller word, ma'am.
Okay, Sanjay, I got your question. I'll take this up with Swati quickly. Swati is sitting on a loss of almost 42,000 odd rupees. What are the charts indicating for KPIT Tech? Is there a chance in the next 3 odd months he'll be able to recover his losses or some of his losses?
My view is little bit cautious in this particular counter because from the last 3 months we are continuously witnessing a formations of a low top, slow bottom, and we are hitting the resistance of 1400. I believe more downfall can be seen, which might take a counter towards to 1100. I will not suggest to book the losses at the current market price. If possible, try to average it out whenever the counter comes nearby 1100 or 1050 levels. You can average it out so that your buying price will come down. And again, the pullback rally or the bounce back rally can be seen, and which will take a counter towards to 1300 to 1400. So the longer term view is definitely positive, but for the short period of time, 1 to 3 months, my view is little bit cautious. So you should hold on this particular stock. Let the stock find out the support nearby 1100, and you can average it out, and you can book your profits nearby 1300 to 1400 levels.
Okay. All right. So our next question is on Bazaar. I'm just going to pull this up. If I remember correctly, it's not a very it's a recent listing, right?
No, it's not a recent listing, but recently it was in news on the back of a major order win. I'll try to pull that up till you answer.
In the meanwhile, let me read out the question. We've got Shailendra Gautam who's asking about this. He's bought at levels of 322.8, which is elevated levels. So he's incurring a loss at this point. It's 2,600 crore market capitalization company. And I'm just pulling up the quarterly results. It's yet to post its numbers for the June quarter. I'm just wondering, Asta, if you have any coverage on this stock, and if so, what would the view be?
I think this is a Bajaj Group company, if I'm not wrong, but I don't have a coverage on this counter, so I'm sorry I cannot express my views on.
Okay. No, you have something more?
Yeah, so it's interesting because the kind of revenue it clocked in 2025 was around 2,500, 2,600 odd crores. But in the past few odd months, it's received its order book has totaled to almost 1,000 odd crores. So that's why it was in focus very recently.
Shall we take a technical view then, Swati, on the charts? Is there any opinion that you would have if you bought at levels of 323? Which is elevated levels, what would your strategy be?
Yeah, Alex, looking towards the chart setup, the chart setups are really not doing very well. We are hitting a very strong selling pressures, and I believe that the stock has a potential to come down up to 200 level. Up to that level, we are likely to witness a selling pressure. So sell on rise strategy should be employed, because whenever we see the uptick rally, which takes the stock towards 250, 260 levels. So at the current level, my view is a little bit cautious to bearish. Whenever we are getting any high towards 250 to 260 level, you should exit your long positions.
Okay, so that's the view with regards to where Bazaar project stands. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching Ask Profit, and let's dive straight back into the questions that you've sent us. And by the way, if you're tuning in for the first time today, you can call us on that number that number. And you can send us a message there. Let's talk about Chambal Fertilizers. And one of the stocks in the day today is Paradeep Phosphates, also in the fertilizer space. And I'm wondering whether the benefits will accrue to Chambal Fertilizers as well. It has not yet posted its Q1 numbers. And Ramesh from Chennai is holding at levels of 555 rupees. He's ready to hold it for 6 months and he's ready to add more. Asta, what are the prospects for this company in the earnings for the first quarter as well as for this financial year?
So we are liking this company because what we are seeing right now in the fertilizer space, the results are coming out to be very, very good. That is what we have seen in the other counters. So my idea here is that this company will definitely going to post very strong side of a number, especially on the margin front. We can see some sort of a uptick. And in fact, we are expecting this company to post the growth of more than 10% in their top line as well. So on that basis, we are positive on this counter, remain invested in this counter. And if everything goes well with the results, then definitely this counter is poised to move till the level of 580 to 590.
Hold is the view on Chambal Fertilizers is what Asta is saying. Our next caller, Samir, is calling us from Srinagar. Samir, hi. A very good morning to you. How's the weather in Srinagar?
Yeah, good. Fair enough.
Okay. Okay.
But Samir, the fair enough in Srinagar is going to be much better than the fair enough in Bombay. So we can only dream about being where you are.
No, comfort. Yeah. Climate is comfortable.
Very good. Good to hear.
All right. Go ahead with your question, Samir.
I've got Elecon Engineering for 500 shares at the rate of 600.
Okay. Okay, and you want a fundamental view?
I need know from Asta ma'am.
Asta. Okay. Okay, Samir, I got your question. Asta, your view on Elecon Engineering. He's sitting on loss of around 15,000 odd rupees right now. What's the view like?
So view is quite positive because we know this is the company which is into the industrial gear solution, and the kind of the results they have posted, they are coming out to be very, very strong. More than 30% rise in the top line. In fact, the bottom line was an exceptional performance. So I think, and I believe that this counter has a potential to move more upside from here. Right now, it is quoting it around 569, 570, and it can move till the level of 650 in the medium term. Hold is the recommendation from my side for this counter.
Okay, hold is a recommendation on Elecon Engineering. Samir, hopefully that answers your question, and I wish that our weather was as comfortable as what you're experiencing, and hope that continues through the rest of the year as well. Let's talk about let's talk about BSE, and this is a question from Jatin, who's writing in from Patiala in Punjab, and you all know what Punjab is famous for. Let's talk about BSE though. 1,200 is the buy price and 50 shares is what he's holding. He's wondering whether to book profits. What's the view, Swati, on the chart? You're on mute again.
My view is definitely positive on this particular stock, but at least partial profit should be booked at the current levels because the counter is trading at a higher levels, and I believe that 24,000 is the cluster support zone. But if it's breakdown, then more selling pressure or the profit booking is likely to be intensified, which might take a counter towards to 2,200 to 2,000 levels. So up to that level, we might witness some sort of a depth. So at the current market price, you can book your partial profit. Second partial, you can hold on with a trailing stop loss of 2,400 rupees. Upside rally can be seen smoothly once it manages to give the breakout of a 2,550 levels. If it's break that level, then the smooth rally can be extended towards to 2,900 to 3,000 levels. So the view is positive. Hold your partial profits by keeping a strict stop loss for 2,400 levels.
All right, so that's a view on BSE. And the next caller is from Indore. Naman is calling us. Naman, namaskar. How can we help you today?
Yes. Good morning, sir. I have a question from Astha, ma'am, actually.
Okay.
I have purchased 183, 1624 quantity of Irida, and at the average price of 183 rupees. And I am ready to wait for 1 year, sir. I just want a feedback from Astha, ma'am.
Okay. All right. And why IREDA and not REC and PFC?
Actually, I have purchased that, but I have done the SIP in that stocks.
In REC PFC?
Yes.
Okay, and this is part of your long-term portfolio?
Yeah, sure.
And so therefore, why is IREDA only 1 year, Naman?
Actually, I have purchased because last time in other channel, Astha ma'am I suggested to buy it. That's why I purchased it.
Okay, all right. And I'm glad that you came to our channel to clarify. So,
Yes,
Astha, the question is therefore to you, and there is context. I'm glad that Naman shared that with us. 183 is the buy price. Would you hold for a year?
Surely, because when I recommended it, it is definitely for a longer term horizon. We have seen a strong growth in their order book. I think around 20% rise, what we have seen. And what I believe that it is a pure play, green financing NBFC. So this holds quite a good importance. Secondly, their ratings are very, very strong. So I believe that in the longer term, this counter can move till those levels. I mean, more than 180 to 200, but it is a long-term story. So idea here is to extend the time horizon from 2-3 months to 6 months at least, and remain invested in this counter.
Is the view on IREDA is what Astha is saying. All right. The next question is from Gautam Shinoy, who's writing us from Bengaluru. He's got 300 odd shares of Bajaj Finance at an average price of 910. He wants to hold the counter for 1 odd year and wants to know as to what should he do next, because in the last few sessions it's seen a downtick, as Alex was mentioning, 9% in the past 3 odd sessions, and this is on the back of its earnings. But Swati, on the charts from a 1 year perspective, do you think he should continue to hold?
Yes, for the 1 year perspective, definitely you can hold on. But for a shorter period of time, my view is a little bit cautious because the counter is on the verge of giving the breakdown of the cluster supports level. Already the counter is trading below the 900 rupees, which is a cautious sign on the technical front. And the selling pressure can be extended, and which might take our stock towards to 830 to 820 levels. Up to that level, we are likely to witness a selling pressure. Positive momentum can be seen only if it manages to give the breakout of a 940 levels, which is acting as a very strong resistance levels. But for the longer term horizon, definitely my targets open up for at least 1150 to 1200 levels. So if you don't need of any capital and you have a patience to hold on for a 1 year, you can definitely keep a hold to your long positions. And if you're getting any dips towards to 700 levels, you can add on the particular palm stock.
Okay. All right. I believe our next caller is from Andhra Pradesh. Shravan is calling us. Shravan, very good morning to you. How can we help you today?
Very good morning, Alex, and very good morning to the analysts as well. So I have a sale. I am holding 100 shares of 136 rupees. So I am getting a incurred loss of 1100, 1300 rupees. So can I hold it or can I sell it?
First of all, am I getting your name wrong? Your name is Shravan, right?
Shravan Kumar, yeah.
Shravan, okay. So I was pronouncing your name wrong. Apologies. So you want to know whether to hold. By the way, in case you're interested in sale, do have a look at the interview that we did with the management. Just confirm, would you like to hold this for the long term?
No, I haven't seen that interview with the management.
You can find that on YouTube.
I will file.
But I'm saying, do you intend to hold sale for the long term?
Not for it's for short term only. I have purchased, but
understood. Okay,
I need to understand that.
Yeah, let me go across. Yeah, please go ahead.
And Alex, one more thing.
Yes.
So I have asked for the Pondy oxide analysis as well, but the market cap is very less. But it's a good company, right? So NDTV has some criteria. I think panel has said that. Yeah.
Not really criteria. It's just that
market capitalization.
Yes, it is difficult to get you a view on companies that are below a certain market capitalization. But I see that it's about 3,250 crore odd market cap. Pondy Oxides and Chemicals manufactures lead metal and alloys and other non-ferrous metals. So I can check, Shravan, I can check if Astha has a view. Astha, Pondy Oxides and Chemicals, do you have coverage?
No, not for Pondy Oxide, but for sale I can express my view if required.
Please.
Yes. So for sale, we are positive on this counter, although he's yielding some losses, but that are just due to the market conditions and nothing wrong with the fundamentals, as what we have seen that the bottom line has seen a surge in the quarter by that is of the Q1 of FY26. So the results seems to be good. and we believe that going ahead also we can see increase in their EBITDA per ton. So we are positive on this counter for the medium to long term. Remain invested in this counter. Definitely, it will yield some good profits to you in the longer term, and hence our price target is 150.
Okay, so continue to hold sale. The next question is from Sudhir, who's writing us from Mysore. He's holding 761 shares of RVNL, bought at 467 a piece and sitting on a loss of around 85,000 odd rupees is what he's saying. Wants to know if you can continue to hold or exit at the moment and book losses. Swati, on the charts, what would you recommend?
At the current level, I will suggest to hold on because the counter is really trading at a lower levels, entered into the oversold zone. So the depth is limited on the downside. No use to book the losses at the lower levels. I will suggest to hold on. If you are getting any rise or the bounce back rally towards to 390 to 400 levels, at that level you can definitely exit out because it is acting as a very strong resistance zone of 200-day moving average. From the last 3 to 6 months, we are continuously witnessing that the stock is unable to give the breakout of 400 levels. So that is acting as a strong resistance level. So sell on price strategy should be implied in this particular counter.
Okay, all right. So that's with regards to where RVNL stands. Our next question is from Neeraj, who's calling us from Kolkata. Neeraj, hi, a very good morning to you. How can we help you today?
Hi, madam. Hi, Alex.
Hi.
So I'm holding. So I'm holding 5,000 shares bought at the rate of 117.
Okay.
In the year 2015. So I just wanted to know from Astha man or the second analyst that whether it can touch 1,000 by coming Diwali.
By coming Diwali, okay, that is an ambitious target, I must say, Neeraj. But congratulations, because 24 lakhs is huge profits to make, and you've entered the counter at the right levels. The stock is currently trading at 603. So congratulations on that. Just before I go on to Astha, what was your thinking behind buying Ambuja Cements? Hi Neeraj, can you hear me? Okay. Yes. What was the thinking behind buying Ambuja Cements?
Ambuja actually, madam, at that time, Congress government was there, and at that time also there was a lot of capex and all that.
Achha.
So I just went and bought down 5,000 and did a 117.
Okay.
So I took a risk.
Okay, Neeraj. Got your question. I'll take this up with Astha then. Astha, your view on Ambuja Cements. Should he continue to hold or book some profits now?
And is 1,000 possible by Diwali?
Yeah.
I think नीरज का इरादा ये है कि वो सीमेंट का स्टॉक बेच के घर खरीदे.
No, I'm already having.
Second house, यार. Neeraj, you can have one more house. More than enough. Okay. So but is 1,000 possible, Astha?
So if I talk about the fundamentals of this company, what I believe, yes, 1,000 can also be achieved on this counter, but in the longer term, because in the shorter term, my targets are limited to 700 to 710 odd levels. Now talking about the fundamental, they have got a very strong exposure in the South India. First of all, so that is really working positive for them. In fact, the company has got a very strong traction from the industry also. This is what we are seeing. And now their synergies with the Adani group is also, working in the favor of this company. So almost, I think the company is looking to set a very strong numbers going ahead also. This is what we believe, because numbers they have not announced as of now. Maybe on 31st, I think, if I'm not wrong with my dates, it is 31st of the July, then this company will be announcing its number, and we are expecting good set of numbers. So initially, one can set the target of 700 to 710. But yes, 1,000 is also possible in the longer term horizon, and I think Swati is the right person to tell the time frame. But I think 1,000 can also be achieved maybe 2 to 3 quarters down, 2 quarters down the line. That is 6 months.
Okay. All right. So that's the view on Ambuja Cement. By the way, Motherson Sumi has come out with its Q1 earnings, where the revenue and EBITDA saw an increase, but the margins took a bit of a dip. We had a conversation with the Chief Operating Officer, Anurag Gehlot, and here's what he had to say about the delay in execution of the Gujarat plant. Listen in.
EV will take some time to come in India as the ICE is there. Ease of driving ICE in terms of infrastructure, in terms of worrying whether this car will be able to drive me 250 kilometer far from this place to my hometown. Most of us work in a migrated locations. All of us. We unless and until you are living in metropolitan and you get a job there, which is a very small rate to have that. So most of the people are migrated, and when your people are migrated, car is a second home. Everybody wants car, want to live in that with family, wife, children, and whatnot. So car is something which is very near to your heart. So, and if you are not confident of infrastructure at this point in time, whereas a lot of things has been done, it's not that it's not been done. If you see like road infrastructure or things like that, which is coming up very nice. Last 1 decade, I can say, never been like this in many years.
Right, Motherson Wiring and wiring harnesses, by the way, is what they manufacture. They were spun off from Motherson Sumi, and they're an ancillary player in the automotive space, of course, but they cater to a wide array of automotive companies, including electric vehicle manufacturers, which is what is interesting about it. Their margins took a bit of a dip, though. Let's see if that changes down the line. But we were speaking about Ambuja Cements before we went to that interview, and Swati, the question was whether 1,000 is possible by Diwali. It's just a couple of months away, so that would require a very significant run up in the stock. Is that likely, and what are the more realistic targets?
Frankly speaking, 1,000 levels will not be achieved in this Diwali. 750 to 800 levels can be tested as per the extension, whatever I draw on the time cycle. It shows a target of at least 750 to 800. Up to that level, we can witness a positive momentum. But 1,000 levels can be witnessed in the next financial year and so. At the current level, view is definitely positive. The person can definitely hold the long positions.
All right, standard disclaimer here, Ambuja Cements is part of the Adani Group, and so is NDTV Profit through the NDTV Group, as you know. Our next caller, Mohan, is from Karnataka. Mohan, very good morning to you. How can we help you?
I have 15,000 shares of Federal Bank, bought it at 214.23.
Okay.
I just wanted to have view on that.
So it's a significant quantity that you've bought, Mohan. Did you buy it for the short term or the long term?
In fact, I bought it for short term only.
Okay. And is this a significant portion of your portfolio, or is this a small part, less than 10% perhaps?
It's about 30+%.
Okay. So bear in mind that you need to reduce concentration risk, Mohan, especially if you are looking for short-term trading ideas. Do not use a very large portion of your equity portfolio for trading purposes, and have a long-term portfolio. So what I will do is, let me get you a view from Swati on the charts, but I will also get you a view from Asta, because if the suggestion is to hold for the long term, you're incurring a loss of about 1 lakh or so. If the view is to hold for the long term, you can then take an informed decision. Swati, on the charts, he's bought at levels of 214. What should he do?
My view is a little bit cautious on this particular stock, because from the last 2 weeks it's continuously trading in low top, low bottom formations and facing a very strong resistance of 210, 15 to 20 levels. Downside, the immediate support lies at 200 levels, provided by its downward sloping trend line that will act as immediate support level. If it's break that level, then more selling pressure is likely to be seen, and which might take a counter towards to 185 to 180 levels. So view is a little bit cautious. I will suggest to hold on the long position at CMP, but place the strict stop loss of 200 rupees. Positive momentum can be seen if it manages to give the breakout of 250, that is acting as a 20 days moving average resistance levels. If it surpasses that level, then again the trend will be changed for a shorter period of time, which will take a counter towards to 240 levels and so. So at the current market price, view is cautious. Hold the long positions by keeping a strict stop loss of 200 rupees.
And Asa, very quick view, because we're running out of time. Federal, is it a hold for the long term on the fundamentals, or are there better prospects in the banking space?
I think he should remain invested in this counter for the price target of 225 to 30 at the initial level, because we believe that management is setting very strong credit growth figures of around 14 to 15%, and they are looking forward for increasing the CASA ratio also, which will increase their return on assets ratio. So I believe going ahead, management's focus will definitely help this bank to move upwards from here, and hence remain invested in this count.
Okay. The next question is from Tushar, who wants to know about Jamna Auto. He's bought 1465 shares at 103 a piece. Your quick view on this, Asta, should he continue to hold and should he average at the current levels?
I think hold is a better strategy for this counter. So we recommend a hold on Jamna Auto because we believe that the auto sector is well poised to move more upside from here, and Jamna Auto is one of the players with a price target of around 102 to 105. One can remain invested in this counter.
All right. It's time now for the rapid fire round, and this is where we throw as many questions as possible at Asta as well as Swati. Ladies, I hope you're ready. The first question is on IndusInd Bank, bought at levels of 838. Sujay from Jaipur wants to know whether a hold or book his losses. Asta?
Hold. We are recommending hold on this counter with a price target of 850 to 860.
Okay, Sigachi Industries is the next counter. Wilfred from Navi Mumbai wants to know if you can continue to hold the counter. He's been holding since the company is listed. Your view on this, Asta?
Sigachi Industries is again a hold from our side for the price target of 42 to 44.
Tejas Network is the name of the counter. Average price of 676. Moses wants to know. No, Dave wants to know. Writing from Chennai. Swati, would you hold?
Yes, I would like to hold the long positions for immediate target of 640 to 650 levels.
Sudhakar has 50,000 available and wants to invest in blue chip stocks like Reliance, L&T, Infosys. One of these counters that you like, Asta, what would be the entry point?
So I think L&T is a good counter to invest in this, and hence we recommend investment in the L&T.
Okay. PI Industries, Pakshal from Ballari wants to know, bought at levels of 4,097, holding for 2 years. View for the next 12 months is being sought. 5,000, is it possible? Swati?
Yes, definitely. Those are the targets can be seen, but initial target will be 4,500. Beyond that, 5,000 levels can be seen. So it's a hold from my end.
Okay, Axis Bank is the next counter. Shiva Kumar has been holding 100 shares at the price of 741 since 2022. Wants to know if you can continue to add more, considering Q1 was bad and stock is tanked. Asta, your view?
Add more, but not at the current level. Maybe at the level of 1,020 to 1,030. One can add more this counter.
Okay, Hindustan Aeronautics. I hope I'm right when I say that the buy price is 750. Hanumantu wants to know whether to hold or sell at this point. Asta?
Hold. Maybe it will take some longer time to see the more upside from here. But yes, one can remain invested in this.
Okay, all right. Well, we've taken quite a few questions. Asta, Swati, thanks so much for joining in today and for answering all of them. Pleasure as always having you.
Thank you.
All right, that brings us to the end of this edition of Ask Profit. We've had some interesting conversations with some of you today, and it's always something that brings a smile to our faces. Up next is Know Your Company, and from Mahima and myself and the team that put the show together, thank you so much for watching.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the Hello and welcome. You're watching KYC. I'm Harsh Saita. Today we're going to look at an interesting company from a perspective of stock price performance. It's been up 2x since the 2nd of May of this year. So it's given stellar returns to investors. been a fabulous rally in the stock. What's leading to that rally is what I'd want to first off know. Second, we're talking about Sterlite Tech, and therefore the optic fiber business is going to demerge, and we're going to try and understand, or rather the optic fiber business is going to be the existing business of the company, and we're going to see a demerger of its global services business. Now, what does that demerger essentially lead to, and what are the opportunities now with regard to that demerger is what I'd want to explore. Is Starlink a potential client? That's going to be a big one if that is the case. So you want to understand whether that is actually the case or not. The other one is the opportunities. There's a BSNL contract as well as BharatNet, which is a large investment which will come through. Both of those are big opportunities, but given this demerger, how much of an opportunity is that for a Sterlite Tech, and how much for the demerged company Sterlite Networks, which is yet to take shape and take form, right? So I'd want to know what the opportunity on each of those individually looks like. In terms of the optic fiber business, there has been a build-up in inventory in the US, which has led to some bit of tepidness with regard to the numbers over the last maybe year or so. Is that unwind actually happening? Are we seeing that unwind? How real is it? What could the impact of that unwind be, and what could the timing of that unwind be? And therefore, how does Sterlite Tech take opportunity from that? The other piece is with regard to India. The capex cycle now likely at the fag end, so you might well see a slowdown in the India business. What does this lead to in terms of numbers, and how is Sterlite Tech placed to actually deal with that? There is also a huge debt which has been a drag on the numbers. We'll look at the numbers and I'll explain what the debt picture looks like. Now, in terms of that, what is the glide path with regard to debt going forward, and what is the impact of the debt falling on both EBITDA, maybe not on EBITDA, but more so on bottom line, which is on profit after tax. Now, the last one is this: growth and margin guidance in the optic fiber business. Found it difficult to actually find that kind of guidance. There's very generic guidance available. We'll try to quiz management on specific guidance if they have any. So all of that and more on today's KYC. Let me start off, as we always do, with what the company does and give you a quick snapshot of that. It's a global leader in the optical fiber and cables business. So that's what Sterlite Tech does. In terms of manufacturing, it has manufacturing facilities in 5 countries and sells to over 100 countries. The key focus area, of course, is telecom, but outside of that now, data centers could be the new lever. Digital networks is also the other lever. The recent demerger, of course, of the services business, we spoke about that, is now going to be demerged to STL Networks. How quickly does that demerger come through is the other question which I would have. In terms of product, and we'll break this down, you have the optical fiber cables, which is the core product. It's around 22% of the top line of the company. Optical fiber, which is raw glass fiber, is around 14% of the turnover. Copper or telecom cables is around 18% of the turnover, and optical interconnect, which is connectivity solutions, is around 12% of the turnover, has a slightly higher return on capital employed. So any positivity on that business will lead to a bit of an uptick with regard to ROC. And then there's a relatively smaller business called STL Digital, which is software, cloud, AI. It's got a smaller revenue size in comparison to some of the other core products which Sterlite Tech does. In terms of the business model, it manufactures, as I said, in 5 countries, including India, USA, China, Italy, and the like. You also have it selling not just domestically but also internationally. 30% of the top line comes from international, and of course it will have a whole plethora of clients. It's highly integrated in terms of raw material to finished goods, fairly integrated process, but copper could be the one big variant here or variable factor here. Of course, key competitors among others is Himachal Futuristic, but also an HFCL, for example. And then there are lots of Chinese players, and global competition is quite high in this space. And that leads to a little bit of pricing pressure as well in bad times globally. So whenever there's a global slowdown in terms of capex on the telecom front, you start to see the pricing start to chip away, which also impacts margins. So it's a cyclical kind of a commoditized kind of a business, largely because you have a lot of Chinese players and global players present, and therefore any slowdown, cyclicality causes an impact with regard to numbers. Now in terms of raw materials, the main raw material of course is copper, but you also have silicon, that's the other one. The sourcing happens globally. It's LME linked, so and therefore highly commoditized. The price or availability risk is high. It's mitigated of course by local sourcing, and there's some active risk management which the company also does. There is some of course commodity risk which is very, very evident from the kind of raw material sourcing that happens. Pass through of course is a challenge because that depends on what I just explained in terms of how the global competitive landscape is playing out and how pricing is playing out there. So it's all about scale in this business. If you can scale it well, then you're well placed with regard to the margin levers that you have are far greater in comparison to some of the other competitors, and Sterlite Tech is one of the top 3 players in this space, and therefore has that advantage but also has certain disadvantages, and for that we have to look at the key metrics. And let's quickly break that one down. Let's understand first off, starting with the income statement. We'll thereafter look at the balance sheet, the cash flow, the return ratios, as we always do. Thereafter, we'll look at shareholding, street cred, valuations, and outlook. We'll cover all of those on KYC for Sterlite Tech. Let's start off with the income statement. And you'll have to take this with a little bit of pinch of salt, and I'll explain this. FY23 is the combined business number on the top line, so is FY24. FY25 of 3996 crore is just the optic fiber business. So if I were to take a comparable number, and that's why we've not given a CAGR number as you can see on your screen, but if you were just to take the comparable number FY24 versus FY25, it's a flat line with regard to the top line, right? So that's how the top line is evolved. Margins are largely 10%. So FY25 is now the new base with regard to where the numbers are concerned. I also want to highlight the one possible key positive here is the fact that your interest payments in FY25 was 241 crore. So that negative net loss or net loss of 123 crore, if I can call it, largely driven because of that interest cost being extremely significant. And you look at the interest coverage ratio, so which is the interest over EBITDA, that too is quite elevated, because what you're seeing is the interest cost is so high, it's virtually covering 50-60% of the EBITDA, and which is not a healthy sign. But that's FY25. FY26 will show us a slightly different picture in that sense, and let's pull out those numbers and that will give us some perspective. The FY26 income statement, or the Q1 FY26 income statement is largely driven by a 17% top line growth. The EBITDA has shot up substantially from 64 crore, it's up to 132 crore. Margins have inched up as well, and what you're seeing on profitability is also quite strong. It's a 10 crore profit. So from a loss of 120, it's come to a 10 crore profit. The question will obviously be how sustainable. You don't want to look at those QOQ and YOY numbers with regard to profit, because the erstwhile number is actually a loss, and therefore you want to remove those. In terms of the margin trajectory as well, let's pull that up. There you go. So you're looking at margins which were sub 13% in FY22. They fell to 10% in FY24, FY25, and have now rebounded towards the 13% mark. The question is, there is an aspiration to increase margins. The question is, how much can they do that? How much bandwidth and how many levers do they have to actually increase the margins and therefore increase likely profitability? We've given this a neutral because it's a fast evolving environment at this point, both on the top line as well as on the margin number. You're seeing so much variability, it's difficult to quantify exactly where it will go. The other question also is that how sustainable and what kind of a sustainable number can we arrive at where the margins are concerned. So all of those questions we'll try to get answered and get a better perspective on that. But let's quickly move to the balance sheet. And you're looking at an equity raise which happened last year of around 1,000 crore, which is what has led to the bump up in the equity capital, which you can see on the top line. Other equity book value also there. What you're also seeing is a borrowing number of around 1,800 crore even now. That is likely to go down, and that is significant given that the company has a market cap of around 6,000 crore. The debt to equity is nearly 1:1. So not looking pretty even from that perspective. But we've given this a neutral given the fact that there is a thought process to bring this down sharply. There's an intention to do that. How quickly, how sharply is of course the question. Therefore, again, difficult to rate. We've given this a neutral. Cash flow. Now, very quickly on the cash flow, you look at cash flow to EBITDA. FY23, there was inventory build up, there was receivables build up, all of that building up has led to that kind of number. So there's variability on this as well. How stable can the cash flows be going forward will again be the question, but largely last couple of years has been okay. Again, the payables spiked in FY25, we saw receivables spike as well. Or rather payables fell in FY25, receivables spike as well. All of those adversely impacted the operating cash flow in FY25. So that's how it's played out. Your ROE numbers not looking healthy either. So your ROE numbers have been volatile. Can there be more stability is the question, but clearly that one's also a thumbs down. When you're looking at shareholding, now shareholding has been above the 50% threshold. They've diluted a little bit and brought it down to 44% now, and that is only because of the QIP that they've done. So really no selling per se from the promoter group, but what you want to see is more stability, lesser dilution happening. So some color around that will help as to how funding is happening with regard to the debt which they are planning to service and how quickly can they service that. Now let's look at street cred. This has been fabulous and this has been very interesting. You look at the 1 month stock price performance up 19%. The 2 month stock price performance, it's a two bagger. 6 months is up 21%. Year to date up just 8.5%. And the 1 year stock price is actually down 15% and 5 years is also down 15%. So you've given this an absolute neutral. It's given the quantum of variability with regard to stock price performance. But of course, recently the stock price has done very well, whereas over the longer term, it's been quite a dampener in terms of returns for shareholders. Now let's look at valuations. This is a very tricky one. Frankly, viewers, all these metrics have been extremely tricky to kind of deal with. So want to keep it out there, put it out there. In terms of current EBITDA, it's at 416 crore. We discussed this. EBITDA as per Nuvama estimates for FY26, I'm talking about now, 694 crore. The enterprise value currently sits at around 7,500 crore. Mind you, this is basically price to EV broadly is how it is dealt with in terms of the valuation. EV to EBITDA is what they deal with in terms of the valuation. So at current, EV to EBITDA is around 18 times. 1 year forward is around 11 times. And if I were to roll this forward to 2 years at a 15% margin, then you're roughly trading at sub 9 times EV to EBITDA. Question will only be, is that doable? Is that sustainable? Can the top line grow at the rate at which we're penciling in terms of our estimates? But broadly, that's the thought process. Let's look at the outlook. There's no numerical PAT or revenue guidance which has been given by management. The growth levers, North America, India demand, capacity utilization going up, data centers and AI, all of that is likely to drive demand going forward. But how much can the top line grow by is really the key question. Margins, EBITDA is likely to improve again by how much and what is the aspiration? How quickly do we achieve that is the question. Geographic risks, US and EU tariffs is a big risk on the books. Want to know as to how will that impact the numbers overall. And profitability, well, they aim to turn PAT profitable. They have done that in Q1 FY26. Sustainability of that will really be the question. Very, very difficult to tackle all of this. No absolute clear guidance, and maybe we'll get that as we speak with Ankit Agarwal, who's the managing director at Sterlite Tech, who's going to join us in just a minute. Let's wrap up on the ratings. Now, probably the only company where we found it very tough to put out a rating, but we've done that nonetheless, and that's how it all stacks up. Overall, it gets no thumbs up. That's the one key negative. 3.5 on 8. And mind you, viewers, we've been cautious about this. So I want to put it out there that we've been super cautious with regard to our rating on this one. But it's an interesting one. And therefore, let's go across to Ankit Agarwal, Managing Director, Sterlite Tech, joining us. Ankit, great having you. Let me first start off with what the levers are with regard to growth. You've been at around the 4,000 crore top line number last couple of years. Do you start to see growth come back significantly this year? And I won't talk order book, I'll just talk execution. Give us that perspective.
Yeah, thank you for having me on the show. So I think definitely in terms of the levers that you touched on, the primary one that we look at is how do we improve our cable demand. And as we've been guiding, we want to take this from about 45-50% utilization towards 70% plus utilization. We see that happening as our order book continues to grow and we execute on that. And probably towards Q3, Q4 of this year, we'll move in that direction. If you look at our own numbers from 2 to 3 years ago, when we have broadly run our factories at 70% utilization, we moved towards that 18 to 20% EBITDA margin from currently around 13%-14% margin currently. So that's really what we are focusing on. We've also been working towards improving our cost structure over the last 18 months. And you see that now in terms of our numbers as well. So I think this is the primary focus. On top of this, we are seeing two other areas. One is our connectivity, which we are clear that we want to build in terms of cable and connectivity, improving our attach rate. Currently, that's broadly around 20-22%, and we want to see how we can grow that. And the last part is in terms of data centers. That's a very important growth segment for us. We've been looking at how do we build our portfolio, and recently we've launched our portfolio as well. We're already in conversations with various data center players in India. And as we are all aware, data center capacity in India is expected to go from about 1 megawatt to almost 3 megawatts, 1 gigawatt to about 3 gigawatts between now and 2030. So that's basically the focus area for us as a company.
Okay, so Ankit, point taken. Likely the stock price rally is because of that guidance that you're going to try and hit 70% capacity utilization closer to Q3 onwards. How likely is that? What are the levers of you getting there? Is it the robust order book that gives you confidence? Is it the demand pipeline that's giving you confidence? Is it the pricing, which also you are largely seeing to be okay? Is that what's giving you confidence? Give us all of that.
Yeah, I think, our focused markets continue to be US, Europe, and India. And across all three, we have good reasons to be positive. As we've been sharing, we had about 18 months period where actually US demand was very strong. The deployment was very strong, but there was excess inventory across the system. A lot of that has now got reduced and depleted. So we do see fresh demand coming from our customers, particularly in the US. And this is also a positive sign for us. We've also been early to the business in terms of setting up our facilities in North America. And now we have a state-of-the-art factory which can serve the customers locally. So I think we're well set up for that. In Europe as well, we have a state-of-the-art manufacturing in Italy. And we're well set up to serve the markets, particularly UK, Italy, Germany, which are very fast-growing markets in the Europe segment. And India as well, while we've seen the market being steady, we do expect some growth in India on the back of BharatNet Phase 3, where some of the projects have been awarded and balance will also get awarded in the coming months.
Right. So, and US, do you see that inventory unwind happening, Ankit, at all? And how quickly can we see that happen? Because that will be one key lever. Anything with regard to geopolitics affecting your business? I know you have capacities everywhere and therefore unlikely that it will impact your business, but does it at all? Give us that perspective.
Yeah, I think on the first point, as I said, we have seen that inventory substantially reduce. And if you look at our peers as well in the US, they're also seeing increased demand, both from the telecom segment as well as from the data center segment. Our own view is that the US itself will continue a healthy deployment of fiber over the next 4 to 5 years. So that's something that we're quite excited about, and we want to increase our market share in the US. In terms of our attach rate as well, we want to grow our business, particularly in the US as well for this. In terms of the geopolitical environments, I think it's positive that we have a free trade agreement signed with the UK. So I think to that extent, our business continues to be healthy in the UK. In Europe as well, we are well set up with majority of our supply into Europe coming from our factory in Italy. So we are well, protected out there. And similarly, in the US as well, we have a state-of-the-art factory there, which serves the US requirement. And to some extent, we manufacture from India and supply to the US. To that extent, we are looking at what could be the possible tariffs that get announced. And we're looking at various measures to mitigate that.
Now, let me understand India. You have BSNL, you have BharatNet. How much of these opportunities does Sterlite Tech take? How much of it is Sterlite Networks opportunity? How do you break up these opportunities? How should one look at the 2,631 crore order which you already have between both these entities? Give us that breakdown.
Yeah, so at a macro level, important to appreciate that India is less than 5% of the world optical market. So while we're excited about the growth, really from a major impact to our bottom line, it really comes back to Europe and US markets. India is important for us. It's our home market, and we're excited to connect every village in India with optical fiber. STL, the networks business, has taken up a project in Jammu Kashmir, which is a combination of capex deployment for 3 years and then maintenance for 10 years. So that's largely the project that's been taken up by that business, which is under the brand Invenia. In terms of the optical fiber cables and connectivity, that's typically in that range of 5 to 7% of the value of the capex. It's what ultimately would come to Sterlite Technologies. But equally, we have given our MAF, which is our right to partner with various other bidders who have currently won some of the projects, and there are other bids which I mentioned are on the pipeline.
Sure.
So basically, our focus in Sterlite Technologies will be the supply of our products, both to Invenia, which will be at arm's length, as well as to other companies as well.
Right. Ankit, I have 3 minutes and I have 3 quick questions. Starlink, is it a potential client?
Starlink will be interesting. I think it's very interesting, where I think the technology will be useful for, say, remote and rural applications. I think the cost structure, the latency, and the speeds, they will struggle in your main cities, etc. But certainly, if there is an opportunity to partner with them on some of the connectivity requirements from the satellite, from the link at the home into the house, I think those are areas we could look to partner with them or the other satellite providers. As I said earlier, our main focus is on the fiber and the fiber connectivity. And for that, the primary requirements are around 5G, fiber to the home, and now increasingly data center requirements.
Got it. Ankit, as you go from 45-50% capacity utilization to 70%, where does your top line go? FY26, give us a perspective. FY27, give us a quick perspective.
I won't be able to give any quick perspective. I can only share that we do see that our margins will improve as our utilizations improve quarter on quarter. And I think we're just really focused on our large clients in our global markets, looking to secure long-term contracts with them and really look to support them with both our cable and connectivity as a combined solution.
Okay, all right. I take your point. Ankit, debt reduction, how much and how quickly?
So we've guided that already, that it is important for us to reduce our debt. I'm happy to share that we've done majority of our capex over the last several years. So from a cash flow perspective, whatever cash we generate, a good portion of that will be utilized to reduce our debt. And our target net debt to EBITDA is to bring it down further to 2 times by end of the year. So which we believe is a healthy position to achieve, and we're confident of that.
Okay, thank you so much, Ankit, for coming and speaking with us. Out of time on this edition of the show. Appreciate all the replies that we've got. So thanks for coming and speaking with us. Viewers, completely out of time on this edition of KYC. Thanks so much for tuning in. Stay tuned to NDTV Profit. More action just on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release.
Nifty trades below 24,700 in a choppy day of trade. Most sectors trade in the green. Realty, metal lead gains. Tata Chemicals up over 6% in trade today. Morgan Stanley upgrades the counter to an overweight, hikes the target price as well to 1,127 rupees. And it's the entire defense pack that is under pressure after a weak set of earnings in the first quarter. Bazaar, Zen Technologies declined nearly 5%. And TCS is back in focus, this time on media reports mentioning a freeze on hiring of senior employees as well as a pause in salary hikes. Is more trouble brewing, or the tech giant is just being prudent? We'll find out. And it's a weak set for IndusInd Bank. In the first quarter, margins fall, asset quality worsens on a quarter-on-quarter basis. Provisions as well continue to remain elevated. And a trade deal between India and US hits a roadblock. Trade teams from both nations currently involved in negotiations. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at the markets, and Nifty currently trading sub those 24,700 levels, as you can see on your screens as well. So that's the handover as far as Nifty is concerned. A choppy day of trade is what you're looking at this point in time. So you do have most sectors that are holding on to, in fact, a tinge of red at this point in time. So it's defense, like we mentioned. That is leading losses. So a Bazaar, BEL, all of those counters up, down anywhere between 4.5% to 5% thereabout. And you do have on the flip side the realty pack, pharma as well as metal holding on to a little bit of resilience. But like I mentioned, let's take a look at the top losers from within the Nifty 50 pack. So it's BEL that makes it to that list, down about 2%, Axis Bank, Eternal, TCS as well as on the back foot. And other than that, let's also take a quick look at the list of gainers as well, because you have Jio Financial Services, Bharti Airtel, JSW Steel as well as Coal India. Those are some of the counters that are in focus. But tell you what, let's take a very closer look at Varun Beverages. They've come out with their earnings for the second quarter. In fact, Mahima is joining in with just that update.
So, it's a muted set of numbers. Overall revenue has seen a downtick of around 2% and this is because summers were shorter this time because of unseasonal monsoons, and that is the reason that has, overall impacted the top line at around 7,000 odd crores. In terms of the EBITDA, the growth is, it's almost flat. It's hardly 0.4% up to that almost 2,000 crore mark. Margins have slightly improved. I'll tell you the reasons as to why margins have improved, a couple of points there. In terms of margins, they've improved to 28.5% versus that of 27.7%. Net profit has seen a growth of around 5% odd. Now, in terms of what has aided the overall bottom line, there's other income which has gone up quite significantly. It's gone up, it's almost doubled in terms of where it stands. In terms of the overall expenses also, the other income that I was talking about from, around a 444 odd crores to around 77 odd crores. The cost of raw materials has seen, it's almost flat, but overall the finance cost has gone down. So that's a significant one because they've paid off their debt, and it seems that they paid off further debt in this quarter as well. Changes of inventory, not much change there. Depreciation has inched up, and this is because of the kind of capex that the company is doing. Other expenses has come down, and this is something that has overall aided the margins as well as the bottom line, because that's come down from 1,440 odd crores to around 1,270 odd crores, and that's something that's probably worked for the bottom line. But overall, stock not doing much. If we can try to pull up the stock, it's been hovering around that 0.4, 0.7 to negative 0.6% mark. Was in green, did dip slightly into the red, but has come back to the green, but almost flat in trade as we speak.
Well, absolutely, not much of a reaction as far as the stock at least is concerned. But tell you what, let's also take a closer look at TCS on that note. Let's move on from this one. Take a look at TCS, because that's the one where you have more trouble brewing as far as TCS employees are concerned. We now have media reports as well that are indicating that the recently hired employees are facing delays in onboarding as well. Puneet is joining in with more details on that one.
Well, essentially there is an absence of growth, and that's clearly indicating from the multiple developments happening in the last 2 days. So as you rightly said, there's a freeze now in hiring of experienced personnel and a pause on annual salary increases globally as well. It's something that TCS had said at the end of Q4 that they will be delaying the wage hikes, which generally happen between April to June of every year. Now, that is also under pressure and could be a contention of how long would that delay happen, because while delays have been a key aspect of Infosys and Wipro in the past as well, this is the first time for TCS to do that. The other aspect which analysts are also mentioning is that TCS's move may be adopted by the other companies and increase the headwinds in the sector. That was the key update. The other one is the onboarding delays for those with experience is now exceeding 65 days for TCS. This generally happens between 35 to 40 days. So we've already seen a delay there, and it goes back to what happened during the pandemic in sometime around 2022 when excess hiring was done and people were given offer letters but they weren't onboarded, and we seem to be going back to that time now because of the absence of growth. Finally, we've seen a multiple updates coming in from brokerages as well. Jefferies had mentioned yesterday that it's a canary in a coal mine, which essentially indicates that we could see some pressure on the other large cap players, and hence we're seeing the pressure on stocks like Wipro as well as Infosys majorly over the last 2 days, probably anticipating a similar move from those companies as well.
Well, absolutely. Thanks, Puneet, for getting us that roundup. As far as TCS is concerned, so even the note coming in from Jefferies also highlights some of the weak demand environment for the sector, the headwinds that we're talking about. But let's also take a look at Tata Chemicals, because on the flip side, you have that particular counter soaring in trade upwards of about 7%. At this point in time, on the back of a Morgan Stanley note, they've upgraded the counter to an overweight rating from an underweight rating. They've also hiked the target price to over 1,000 rupees. In fact, Varsha is standing by with the key takeaways.
The reasons why they've given overweight or they've upgraded to overweight from underweight is now they believe that the earning trough is behind them, and because Tata Chemicals have expanded capacities in India, and now they're going to see the higher volumes on the back of the expanded capacities. Also, they are also seeing turnaround when it comes to their UK operations, which was evidence in Q1. In fact, they closed one of their facilities in UK, which actually helped Tata Chemicals earnings for Q1, and they're also seeing stronger contribution when it comes to Rallis as the global agri cycle normalizes. Now, in fact, over in the agrochemical space now, you will see the increase in the volume growth, though there are some pricing pressures still persist, but the volume growth has been increasing across all the agrochemical companies, and that is true for Rallis as well, and that's one of the reasons why Rallis numbers were good on the back of higher volumes that the company has seen, which will benefit Tata Chemicals as well. And they say that the peak capex for Tata Chemicals is now behind, and China soda ash prices are near cycle troughs, and even management told us that now the China soda ash
अड्डों को चूर चूर करने का काम किया। वो घटना पर जो बहस हो रही है, इसमें हिस्सा लेने के लिए मैं खड़ा हुआ। माननीय अध्यक्ष जी, सबसे पहले पहलगांव में जो नृशंस हत्या की गई निर्दोष नागरिकों की, धर्म पूछकर उनको मारा गया, इनके परिवार के सामने मारा गया और बड़ी बर्बरता के साथ ये हत्याएं की गई। इसकी मैं घोर निंदा करता हूं, और जो मारे गए हैं इनके परिजनों के साथ अत्यंत हृदय की गहराइयों से मैं संवेदना भी व्यक्त करना चाहता हूं। ऑपरेशन सिंदूर के जवाब में पाकिस्तान के हमारे नागरिक ठिकानों पर गोलीबारी की, इसमें भी कुछ नागरिक हताहत हुए। गुरुद्वारा भी टूटा, मंदिर भी टूटा। जो भी नागरिक उसमें घायल हुए हैं और जो हताहत हुए हैं, वो सभी के प्रति मैं पूरे सदन की ओर से गहरी संवेदना व्यक्त करना चाहता हूं। माननीय अध्यक्ष जी, कल से यहां पर पक्ष और विपक्ष दोनों की चर्चा चल रही है और स्वाभाविक है जब इस तरह की नुसंस घटना घटे देश में तब इस पर मुक्त चर्चा भी होनी चाहिए, चिंतन भी होना चाहिए, आगे न हो इसकी व्यवस्था की भी चिंता होनी चाहिए। माननीय अध्यक्ष जी, मैं विषय पर आने से पहले आपके माध्यम से सदन को और सदन के माध्यम से पूरे देश को ऑपरेशन महादेव जो कल एक हुआ है इसकी जानकारी देना चाहता हूं। माननीय अध्यक्ष जी, कल ऑपरेशन महादेव में सुलेमान उर्फे फैजल जट, अफगान और जिब्रान, 3 आतंकवादी सेना, सीआरपीएफ और जम्मू कश्मीर पुलिस के संयुक्त अभियान में ऑपरेशन महादेव में मारे गए। और माननीय अध्यक्ष जी, ये जो सुलेमान है ए श्रेणी का लश्कर तोयबा का कमांडर था। पहलगाम हमले में और गगनगिर आतंकी हमले में वो लिप्त था। इसके ढेर सारे सबूत हमारी एजेंसियों के पास है। अफगान ए श्रेणी का लश्कर तैयबा का आतंकवादी था और जिब्रान भी ए ग्रेड आतंकवादी था। और माननीय अध्यक्ष जी, मैं सदन को और सदन के माध्यम से पूरे देश को बताना चाहता हूं, जिन्होंने बैसरन घाटी में हमारे प्रवासियों को, नागरिकों को मारा था, ये तीनों आतंकवादी ये थे और तीनों मारे गए। और मान्यवर, मैं आज इस सदन के माध्यम से सेना के पैरा 4, सीआरपीएफ के सारे जवान जो अभियान में शामिल थे और जम्मू कश्मीर पुलिस के जो जवान थे, वो सभी को सदन और पूरे देश की ओर से बहुत बहुत साधुवाद देना चाहता हूं। माननीय अध्यक्ष जी, मैं इस ऑपरेशन महादेव के बारे में थोड़ा डिटेल में बताना चाहूंगा। ऑपरेशन महादेव की शुरुआत
Alright, and there you have it. That's the Home Minister talking about an important breakthrough for the Indian Army with Operation Mahadev, where 3 terrorists were in fact gunned down. But tell you what, let's shift focus then to Shriram Finance, because that's the one that is in the spotlight after the company reported its first quarter's numbers. Profitability largely in line with estimates. In fact, we have Vishwanath, who's in conversation with Umesh Revankar, who's the executive VC at Shriram Finance. Let's go across and listen in.
That to kick off from the budget, that is February. It was picking up, but early onset of monsoon, I believe, postponed it. Okay. So post August 15th, typically that's a time where infrastructure spent or infrastructure projects kick off and start. That should give additional pickup for the credit demand. And that should help us, because one is the rural being good, rural demand is likely to be better in the second half. The other one is these infra, because once the infra projects come in, big scale, the steel, cement, all infra related demand goes up. So you need bigger vehicles, you need construction vehicles and equipments. There are so many demand, the secondary demand come into the picture. I feel if all things come together and kick off, then we should be able to reach by this year end.
Okay. Quick question around the combination or the constitution of your loan book at this point in time, right? Specifically around gold loans. There, you've seen a degrowth. Now, this was one of those businesses that was being heralded as the next big thing because it's secured, but it's also easy access to cash, good for the lender. Has there been a change in that thought process for you?
Yes, I do believe gold loan can become a larger part of our overall book. We have drawn certain what you call certain plans to make it big, and that's falling in line. Last 3 months, our disbursements were very high. In fact, we have grown disbursement by 20% year on year. But portfolio have not grown because some higher maturity, because it's a short-term maturity. 3 to 6 months is the maturity of the gold loan. So there was some higher maturity. I think we will be able to grow 20% year on year by the end of this year. So we do have a big plan for gold loan. And as we increase the reach, because gold loan is basically reach. You need to be near to the customer. And we have sufficient number of large customers. In the sense, large number of customers who are taking gold loan from the outside. Correct. That's what, when we looked into their credit history, credit record, through all the bureau records, we do realize and recognize that our customers do take a gold loan from the other players in the market. And there will be a large number of people who will be taking from unorganized sector, which that may not be reflected in the bureau records. So we would like to address that and probably help the customers to walk into the Shriram rather than going to the unorganized market and probably benefit out of it. So that's going to benefit the customer. And gold loans are typically short-term working capital loan, which is the easiest part or the cheapest part of working capital for our kind of customers.
Okay. Coming to the asset quality picture now, of course, your gross NPA or the stage 3 has actually been relatively okay. But stage 2, that has shown an uptick. And alongside you, retail commercial vehicles for banks have also started showing higher delinquencies, higher slippages. Are you seeing any pressure building up for the future at all?
I don't really see that because we have seen these cycles going up and down. And since we lend to mostly assets, that is earning assets, we can always take back the asset. And so we are moving from stage 1 to stage 2 doesn't really bother us much. It is a temporary cash flow mismatch. And I do attribute this to early onset of monsoon at the end of June because normally the rain comes post June 15th in many part of the country. This time it has come in the last week of May. That would have been unsettled some of the transactions or some of the activities. And that would have created a little higher delinquency, stage 1 to stage 2. I don't read anything. And most important thing is we all lend to individual retail customer whom we are in touch with. Correct. We don't outsource our what call sourcing of business. We don't outsource the collection. We don't outsource even the if at all we need to take back the asset. We normally do it in house. So we are quite confident that our business is very stable and our customers are quite comfortable with the environment. I have not really seen stress. And I did mention to you that in the Q3 last year, we did see certain stresses building up in certain rural area. That is addressed now.
Okay. So a lot of people tend to look at Shriram Finance as a proxy for the rural economy. And if the rural economy is doing better, Shriram Finance is doing better, that sort of bodes well for the broader sort of economic momentum for India. I wanted to get your sense as to, is that the sense that you're getting when you're looking at the rural economy? Is there a general sense of optimism, of growth that you're seeing amongst your customer base?
Yes, largely yes. When I say rural, I covered semi-urban also, because semi-urban and rural, not big difference in their behavior. Most of their income comes out of the agri economy. Okay. So I do really see this, because what happened is, even if you take beyond the grains cultivation, you take a plantations like a rubber, coffee, cashew. These are all spices. They are all doing well. and they are able to export. So India's export ability has gone up significantly.
Right.
And coffee, especially the other major producer is Brazil. They are having a challenge of, I think it is mostly drought there, and they have a problem. So most of the produce which India can produce additionally, I think it has a good international market. That is also a big plus for earning additional income for the agriculturists.
Right.
So generally, I think the environment is quite positive.
Okay. I'll come to the operational metrics a little bit on specifically around the cost of funds because that's slightly still elevated, and the rate cut will sort of slowly come into the picture and it'll start benefiting you. But what is the outlook looking like? At what point do you come down from the 8.8 to say 8.3? Because the 50 basis points will come in for you.
Yeah, I see. In the book, we have improved from 8.96 to 8.85 in the last quarter, and gradually. At that rate, maybe around 10 basis points per quarter, there should be improvement because incremental cost of borrowing is 8.34 now, and we also have cut the deposit rate by 40 basis points from the first week of August. I think gradually it will fall in. Every quarter, if I see a 10 to 15 basis point cost decrease, that will get added to the net interest margin to some extent. So that should help us. 15% of our total borrowing is floating. 85% is fixed.
Okay.
So the 15% benefit will accrue faster because banks will pass on to us.
Correct.
Maybe a month or 2 or 3. But when the 85%, it takes time because
you'll have to replace the borrowings.
Yeah. So it takes around 18 months time to do that full cycle. Hopefully, the rate cut keep happening and also maintain at this level. In between, there can be some event and rate cut can stop and it can go up. We do not know.
We don't know at this point in time. But generally, are you expecting more easing from the regulator?
I think so because see, inflation threw up very surprising numbers because 2.1 is something unheard in the last 6 to 7 years, and that's really helped because on average we expected, and the central bank, RBI is always talking about 4% as a benchmark or the comfort line. So anything below 4 should give comfort to the RBI. Maybe there will be more to pass on. And liquidity, I think, is a one-time event and it already been announced. I don't think that there will be further announcement on the CRR done. But as far as the rate is concerned, there is a scope as long as inflation is under control.
But isn't inflation falling also a problem for your customer base who wouldn't be able to have that much of a pricing power, who then won't be able to pay you?
Agriculture commodity, because of MSP, they are assured of certain rates. But there is an advantage here because inflation bites rural much more than the urban.
Correct.
Because inflation travels to rural. In the past, inflation never used to go to the rural. Today, it passes on immediately because everybody is consumer of the producers. Like even soap, shampoo, all those things, they are all consumed by the rural area now. So it travels. So I think they are having a little surplus today than what they have maybe a year back or 2 years back. So that surplus is the additional money, what the rural people can invest, spend, consume.
Okay. One question around the margin situation, because 10,000 crore excess liquidity that you're carrying on your book, that is bringing down the margin at this point in time. Are you confident of Q4 it's sort of normalizing this 10,000 crore?
Yes. Okay. As I was telling you, I'm hoping for the infra, what you call spend. That is going to create additional demand. So Q2, Q3, Q4, we should be able to consume. I think by Q3, we should be able to consume that additional liquidity. Then Q4 should be a normal quarter.
Alright, and that's the word coming in from the management at Shriram Finance, talking to us about the outlook for financial year 26, as well as telling us a little more about the rural economy, as well as what they expect going forward as well, because that's what they're talking about in terms of the stress that they've seen in the third quarter as well. But that's all the time that we have on the show. Thank you so much for tuning in.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
scholars from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers here watching Profit Buzzers. I'm Hiral Datia. With me is Puneet Javeri and we have Varsha as well, who's in the studio to take the discussion forward with regards to Waaree Energies on the back of earnings. But let's quickly take a look at what markets are doing at this hour. If you pull up Nifty 50 on the screens, the kind of gains that we were seeing, again, it has cooled off right now, but from the day's lowest levels, the recovery has come in. What's interesting is that we're still hovering around the 24,700 mark. Yesterday, those were the kind of levels that we hit in today's session. Apart from that, if you see in terms of Bank Nifty as well and the sectoral heat map, it's defense which is on the lackluster side, 0.1% lower in terms of Bank Nifty as well. What's gaining is Nifty real estate. So after those two consecutive sessions of declines, that's Friday and Monday, you're seeing some buying interest that's coming in with regards to real estate. Pharma and healthcare is doing pretty well. Infra is up in trade. Metal, energy, oil and gas, auto, all seeing gains upwards of 0.3%. Defense is the one which is down almost 1.3% in trade, and this is mainly on the way the earnings have panned out. Nifty IT has been trading under pressure as well. Consumer durables is down in trade, as well as the private banking space, which has been trading under pressure. Very quickly, if we can just get a heat map of Nifty 50 as well to understand what's happening on that front, that is going to be interesting as well to see. Geo Financial Services, the top gainer. JSW Steel is another one. Bharti Airtel, Coal India, a few of the gainers in trade today. Axis Bank losing out. BEL reacting to numbers. Eternal trading under pressure as well. So that's what the heat map is looking like in terms of Nifty 50. But it's time for an NDTV Profit exclusive. With the tax filing deadline approaching, authorities have launched a major crackdown on bogus exemptions and deduction claims. My colleague Shrimi, who broke the story, tells us more. Shrimi, what are you picking up?
Yeah, hi, Hiral. So, in a strongly worded directive, the Central Board of Direct Taxes has instructed tax investigating officers across India to identify and act against taxpayers suspected of misreporting income or claiming fictitious deductions. So this directive calls for an immediate preparation for a list of taxpayers who have filed returns with bogus claims, both on deduction and exemption. And in such cases, the Income Tax Department is instructed to kind of halt the processing of those returns until the investigation are concluded. So this is huge because they are going to suspend your return filing if there are evidences of bogus claim. Now, in instances where returns have already been processed and refunds disbursed, the department has been asked to initiate recovery proceedings, and the move is, aimed at preventing revenue loss and deterring taxpayers from attempting to exploit the loopholes. Official also tells NDTV Profit that this action comes in the response to a noticeable surge in suspicious exemption and deduction claim filed this season, and sources now indicating that several such cases under scrutiny involving misuse of lesser known sections and inflated deduction figures without adequate documentation. So this is the part of the nationwide crackdown, which is expected to plug the revenue leakage and send a strong message ahead of the tax filing deadline.
That's an interesting story. Thank you, Srimi, for that. And, as Srimi was mentioning, if refunds that have already been issued as well, recovery action will follow. So absolute cleanup drive that the tax department, that the government is undertaking as well. And this is absolutely for the good, because anything that has been with regards to bogus deductions, those are the loopholes that will be filled in from here on. But moving on, Waaree Energies is the stock to focus on in today's session as well, on the back of the earnings. Or if you see in terms of what's happened this time around, a strong set of numbers that has been reported, and this is again in consonance to the ramp up that they've seen in terms of production as well. The stock seeing gains of upwards of around 3%. Amit Baithankar, CEO and whole-time director at Waaree Energies, joins in. Amit, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. A strong set of numbers, so congratulations on that front. If you could help us understand what has worked this time around for this set of numbers, and are you expecting this growth trajectory to continue for the coming quarters as well?
Sure. Well, thank you very much for having me. It's always a pleasure to be on NDTV Profit. Yes, a good set of numbers. We do expect that to continue, and I'll deconstruct why or where does the confidence stem from. As an organization, we are actually concentrating on three pillars: sales, production, and projects. So from a sales perspective, if you look at our order book, it's very strong. It stands at 49,000 crores, 25 gigawatts. And we see a pipeline of 100 gigawatts ahead of us. And so from a demand perspective, it's very strong. Also, last quarter, we got 2.23 gigawatts of order from the US, clearly showing that US is continuing to be extremely buoyant as we expect it to be. Production perspective, we have had the highest quarter for us at 2.3 gigawatts. It's a quarter where we have broken all our previous records without really any major capacity addition at this point in time. Of course, a lot of capacity is being added, which brings me to the last point, which is projects. And so we have several projects where we are building new capacities. For example, our 10 gigawatts of solar cell factory is coming up at Un, which is in Gujarat, a 10 gigawatts ingots and wafers factory, which is coming up in Butiburi in Maharashtra, and several others. So all of these projects are well on the way and are being commissioned at the right period of time. And so therefore, this is a three-pronged strategy that we have, and that's what is bringing success to us. And I think in the long run, this is what is going to yield success.
Right. Well, hi Amit, Varsha this side, pleasure to have you. Amit, you have highlighted an order book, robust order book, I must say, of 49,000 crore. Just wanted to ask, what is the expected revenue recognition timeline from this order book that you're expecting?
Right. So, there are three broad segments in that 49,000 crores, right? There is a US segment, which is of utility markets. And then there is India. And of course, retail is a very small part, but that's, it keeps in. And so book to ship timelines for the retail orders are very, very short. The India orders typically are fulfilled within 8 months to, I would say, one year, 2 months or something of that sort, right? And the US orders are a little long term. I would say anywhere between 1.5 years to 2.5 years. So that's the sort of revenue recognition period that we are talking about.
I understand that you have a decent order book in hand that is, going to be executed in FY26 and 27 as well. But wanted to understand from you what kind of order inflows, are you expecting from India as well as US? Are you facing any, challenges in terms of new orders that will contribute, let's say, from FY27 onwards, or, order inflow still going to be the decent one that you were expecting?
It's a great question, Varsha. I would like to say that, the two markets that we operate in, US and India primarily, are very secular in their demand. The energy demand from both of these markets is because of some very fundamental reasons. In India, of course, a growing economy, GDP continuously on the rise, and of course, new industries coming up. So there is a broad-based reason why, we have a voracious appetite for energy. In the US, there are three reasons, I would say, primarily. There are several more, but three primary reasons is artificial intelligence and the data centers that go along with it. There is also reshoring of jobs or manufacturing jobs, which would mean that there is a manufacturing ecosystem that is coming up in the US, and also electrification of transportation. So all of that taken together, for both the key markets that we operate in, the demand is really very, very secular. And so that will keep propelling a strong demand, which will obviously translate into a strong order book as we are evincing from quarter to quarter.
Amit, interesting point that you made about the markets that you operate in. US, I think 15 to 20% kind of exposure is what you have on an overall basis. The US policy uncertainty, how are you looking at that aspect from here on? Because clearly, we did see questions arise in terms of what should the taxation be, what should the tariffs be in terms of Indian solar imports. How are you looking at that aspect? Because we are pretty much around the corner right now. Tariffs could be announced soon as well.
Right. I'm just trying to paraphrase your question because there's slight problem with the connectivity here. But what I understand you're asking is, in face of the policy uncertainty, what's our outlook of the US market and how do we navigate it?
Right. Correct.
Perfect. So the key way in which we look at the US is, of course, a very, very important market for us. And the best antidote for policy uncertainty is making sure that our strategy takes care of it. And the primary element of that is the global footprint. So we have a very strong manufacturing base in the US, which is only growing. We are almost doubling our manufacturing capacity in the US here in the next few months. And depending on the way in which the policies develop or evolve, we can actually dial up our manufacturing in the US, or take any other measures, even in India, from a supply perspective. We are also closely observing the BTA that is being negotiated between India and the US. And so based on all of the manner in which this evolves, we will decide, what should the manufacturing footprint be. The important part is, in the US, be local, be manufacturers in the US, and make sure that, you take care of certain amount of policy uncertainty that is thrown open because of the changes that are going to happen.
Amit, does this mean that because you would be locally manufacturing with the existing footprint and the addition that you're going to do, the impact will be absolutely zero even if tariffs are allocated to the segment?
So that will certainly be our approach to the problem. I try to negate it to the extent possible. But depending on, finally what the numbers come out in terms of tariffs, in terms of, now, from an ADD perspective, we, like I said, having a footprint on the US side of the equation really helps us in anti-dumping investigations as well. And to top it, we are an Indian company listed on the stock markets with strong profitability requirements out of us from our investors. And so it's a very transparent P&L that we have, which is auditable. So from an anti-dumping perspective, we don't really have any predatory pricing, and that's quite evident. So we should be, in a good position to defend that. But we'll see how does it all evolve. So you're right. our intention will be definitely to try to keep any changes that happen in the policy landscape impacting us to the minimum.
Okay. And Amit, with regards to the EBITDA target for FY26, you're looking at around 5,500 to 6,000 odd crores. Now, taking that aspect into consideration, and if you have to look at the global markets from a supply perspective, your PV module prices have been slightly on a declining trend. So, how are you looking at that aspect? Because there is overcapacity globally.
Right. So, our order book, and I think Varsha asked this question earlier, is already set for the year. We are completely set, right? So we have the pricing already baked in. The whole P&L is set. And so therefore, our confidence on the 5,500 to 6,000 crores of EBITDA is very, very strong.
Amit, also, beyond modules and cells, Waaree is also investing when it comes to, green hydrogen or your battery energy storage system. What is the long-term vision, for these new segments?
So we would like to be a global energy transition company, a company which helps all of our customers, governments all over the world to move towards a world which is cleaner and greener from an energy perspective. And therefore, we will be putting in place all the necessary parts and pieces that are required to move in that direction. You talked about electrolyzers, that's a part of it. Battery storage is going to be extremely important to stabilize the grid as more and more renewables get onto the grid. So that's also a very important part of our strategy. We are coming up with a 3.5 gigawatt hour factory in Gujarat, and that should be also online by 2027. We are getting into inverters and several other components that are required in the whole energy transition ecosystem.
Amit, a very good afternoon to you. Thanks so much for joining in. It's Puneet this side. Just one question on green hydrogen as a follow-up. You mentioned that you want to address this space as well. But for India, how long do you think the transition happens from grey hydrogen towards green hydrogen? And how do you see Waaree being one of the key beneficiaries of this transition?
So, a hydrogen market is actually at its infancy. And it has to develop. So it has to develop from a policy perspective. It has to develop from the perspective of even the customer's demand. So all of these aspects are evolving, and they are evolving in the right direction. And so I would say in the next 2 to 3 years' time, hydrogen will become an important component of decarbonizing hard-to-abate sectors.
Right. Amit, a quick question in terms of the solar cell ALMM, the new clarification that has come in, which will be mandatory from the 1st of June 2028. And for government projects, it becomes mandatory 1 month after the list is published. How does this really change any dynamics from an industry perspective? What would this mean for the sector?
So, any policy clarity always helps the sector, right? So, MNRE has clarified that from 1st of June 2026, ALMM will be necessary. And also the cells, ALMM for cells comes into the ambit. So that's extremely encouraging. And I think it'll overwhelm the industry. What will also really help the industry is continuation of that policy and no major changes based on what has already been announced.
Amit, thanks so much for joining in, giving us perspective about Waaree as well as the future for you. We look forward to our next conversation, but thanks so much for joining us today.
Thank you very much, Puneet, Varsha, and everybody. Once again, appreciate the chance, and thanks a lot for having me here.
No, appreciate you giving us the chance to speak to you as well. Thanks so much. Well, let's also quickly pull up our happiest minds as well, because the results came in just during the conversation. And while the stock is on a tear, the results not much to speak about. There is an exceptional item which was there in the same time last year, which was a 12 crore impact and hence you're seeing a 68% jump in its profits. But in terms of numbers, the fundamental operational numbers don't seem to be that great, and that's in line with what the revenue was anticipating. Revenue was up only 1%, while the EBIT has grown because of this key aspect of one-time exceptional item that was there in the same time last year, and hence we're seeing those EBIT margins rise as well. But largely, we'll have to look at the management and what comments they have in terms of the business performance impact because of tariffs amongst other reasons. But it'll be something to watch out for as we get into the fundamental segmental performance of Happiest Minds as well. But let me go across to Prashant Tapse, who's joining us now, Senior VP Research Analyst at Mehta Equities. Prashant, a very good afternoon to you. Thanks so much for joining in and patiently staying by. Let me first actually get your view on Waaree Energies, because it's a counter that's done very well for its investors. Do you have any view on the same?
Yes, very positive. I think one should focus more on the solar as a sector where government has a lot of support with respect to the PLI schemes and a lot of schemes which are supporting this kind of manufacturers. Again, I like the company's exposure to the US market. I think the way they are planning to have an approach of manufacturing in US, that will obviously set off some kind of risk which other players are looking when it comes to tariff war. So that way, again, my focus would be more on the EBITDA margins, where YOY I have seen 16% from 16% to 23%, a great move on the EBITDA margins, which is really giving some kind of comfort level for a fundamental analyst to have a very positive outlook on the Waaree Energy. Very positive on the outlook what management has said just 2 minutes back with respect to their EBITDA margins, where they are expecting still there is a good room to grow from 23% to 25%, and the overall outlook for the year is really optimistic. So very positive on that, even comfort level with respect to the valuations concerns.
Got that, Amit. But let me also go back to Varsha on a couple of stocks that are really buzzing in trade today. Torrent Pharma as well as something like a Paradeep Phosphates as well. Varsha, what's triggering the positive move on these stocks?
So let me start with Torrent Pharma. The stock is buzzing on the back of Q1 numbers. I would say inline kind of numbers that the company has seen. If you see there was a strong performance when it comes to branded markets. India revenue, if you see, were up 11%, which was led by outperformance in focused therapies, while Brazil revenues were up 11%. Germany's revenue, though up 9%, but this was impacted due to supply disruption, and company remains subdued may remain subdued for next couple of quarters. But a good growth when it comes to US business, which was up 19%. Next on the list is Paradeep Phosphates. Now very strong set of numbers that the company has seen, and one of the reasons is the increase in the DAP prices. So Paradeep is one of the largest producer of DAP, and we have seen the increase in the DAP prices, which has led to increase in the revenues itself. And also, if you see, other income and lower tax have aided net profit, and the EBITDA margin expansion that you're seeing is led by operating leverage, because there's not much increase in the cost of goods sold or in the fixed cost, and your revenue has increased drastically, and no increase in cost, which has led to the operating leverage, and that's the reason you're seeing the huge EBITDA margin impact. So onto the numbers, if I were to talk about, revenues were up 57%, while margins were at 12.4% versus 6% last year. So good set of numbers when it comes to Paradeep.
And with that, I want to mark a Zuari Agro as well, because they're looking to invest almost 180 crores in a JV, which is Zuari Marok Phosphates, and this has something to do with Paradeep as well. That stock is up nearly 12%. Prashant, how would you look at this space? Zuari Agro, Paradeep Phosphates, and you have a Torrent Pharma and Ajanta Pharma on the back of earnings.
I think Paradeep should be the focus stock today, as well as in the history also. The way how they have turned around their EBITDA margin from 6% to 12%, that is really a commendable job the management has done. Obviously, industry has helped them to get this kind of margins. Again, I think the outlook will remain very positive going forward. At least 15 to 20% YOY growth can be expected still in the top line, as well as the margins can be sustainable between 12 to 15% going forward. On the valuation point, again, I think they're very comfortable to have a positive outlook on the current levels as a long-term investor.
A positive view coming in on a Paradeep Phosphates as well. Thank you, Varsha. Thank you for joining us to get us through all these numbers. But we'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time
ICICI
to invest?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest?
ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the
Welcome back. You're watching Profit Bazaars on NDTV Profit. Let's quickly look at a Kolte Patil. Numbers have just come in. This has been under pressure right now. EBITDA loss of around 26 odd crores is what you're picking up right now. And the stock has actually seen a major downtick. It's actually nosedived right now. If we can just get the other numbers as well, because I'm just seeing the net loss number. A 17 crore net loss versus a profit of around 6 crores is what the company had reported. Revenues have also slumped to the tune of almost around 75 to 76%, and this is an interesting one to watch out for in terms of Kolte Patil. They have been looking at Mumbai as well as a development destination, but majorly, not a major, MMR is not a major market, but an EBITDA loss of around 26 crores versus a profit of around 27, 28 odd crores is what you're looking at. On the back of which, the stock nosedives, 5.5-6% downtick coming in there. Adani Power is another one that we should be addressing on the back of the stock split that they are announcing right now. If we can just have those flashes as well, be interesting. That stock is spiked on the back of the news with regards to the stock split. The stock at the day's highest levels with gains of 2% coming in there. The board will be considering the stock split on the 1st of August. That's the latest that you're picking up on this front. In fact, let me go across.
Sorry to interrupt. Kolte Patil as well. The operational update was very weak in quarter one. Value was just about 616 crores versus 711 crores in the same time last year. So it was a 13% fall, and this operation update came about a week ago. So some kind of view had started to pencil in of a weak quarter one for Kolte Patil. In terms of volumes as well, it was down about 13%. So largely some kind of indication in terms of operation update.
But still, if you see the stock it's actually nosediving.
I don't think it was
if we can probably just get a one-month chart of Kolte Patil, because that will give you an idea as to how the street was looking at the stock as well. If we can just get a one-month chart of Kolte Patil, real estate, and because of the last two trading sessions was under pressure. Today there is some recovery coming in there. There you go. Absolutely from what Puneet is saying as well, 9% is the kind of downtick that you're already seeing in the last 1 month. It's actually near a 1 month low, if you have to say it so. Prashant, how would you look at a Kolte Patil number? Because the anticipation was that, yes, it will be a weak quarter. The weakness has come in. The company has reported a loss this time around. What would you advise investors to do?
I think the numbers are really surprising, despite knowing some kind of weakness in the quarter-on-quarter updates, where we have seen every month there is some kind of business update which was very weak. But again, a company going into a loss from a profit standpoint, I think that is a surprise for the market, and I think even some kind of pressure seeing on the back of recent performance. If you see, even June there was an all-time high of almost 458 rupees. So I think on the hopes of better than expected numbers, the numbers were really bad, and that was surprised to see a 5% cut. So overall, the negative outlook will continue.
Negative outlook continues on the Kolte Patil. And Vinay, how are you looking at Adani Power? Stock split that could be looked at on the 1st of August, your view?
Yeah, so stock has corrected from the higher level, and it is trying to take a support around its 50 and 200 days exponential moving average. So 50 days average is at 574 and 200 days moving average is somewhere around 560. So after these are the crucial moving averages for the overall trend to remain strong. So it is acting as a support, and the yesterday's low is also an important support, because yesterday we saw a doji candlestick pattern that was a reversal sign, first reversal sign near the support. So yes, I would suggest that if somebody is holding a long position, then 557, which is the 200 days EML level, that should be kept as a stop loss in trading long position. So overall, it has been a gradually improving on the charts, so not that much negative, and we can expect some positive trend to from here. So 557 should be the stop loss in long positions.
So that's with regards to Adani Power. But let's look at the financial side of business now. IndusInd Bank, let's pull up that one on the screens, because the stock did open higher with gains of nearly 1.5%, and now you're seeing that stock down almost 1%. Bernstein has maintained an outperform. They have a target price of 1,000 on the counter. Citi has maintained a sell. They have a target price of 765. Morgan Stanley, an underweight with a target price of 750. And a Macquarie, which has maintained an underperform, and they have a target price of 650. So that's the lowest one that you're taking from the 4 brokerages that we're covering right now. Clearly, the upcoming trigger will be the CEO announcement and the strategic roadmap from here on for IndusInd Bank, and that's what the street is eyeing as well. Very quickly, if I have to look at IndusInd, Prashant, your view, what would you advise investors to do? Do you think at levels of 800 it becomes a good buy, taking into consideration the fundamental aspect from here on that the cleanup is done? Or would you say it's still a wait and watch?
I think I'll be having a wait and watch approach until unless we get a clear picture from the management side where the new CEO as well as the roadmap for next 1 year. So it will take its own time to get a new management and then take charge and start doing good things in the banking system. But again, I would like to see some kind of good tips anywhere between 700 levels, so that can give me some kind of comfort levels when I see the book value which is almost near to only 820 rupees. So a good discounted to its book value can be a great opportunity for long-term investors to buy. But again, every dip can be an opportunity.
Fair point, Prashant. But a couple of other stocks from the banking and financial space, Go Digit as well as Fedbank Financial Services are in focus post their Q1 earnings. Stocks, both of them reacting very well industry today. Let's get in Harsh to give us more what's working for both of these. Harsh.
Well, with regard to Go Digit, the numbers were solid. You saw 59% growth on the profit before tax number, the more relevant metric, largely because the tax impact has come in Q1 FY26 versus Q1 FY25. So PBT, the more relevant metric there. In terms of the claims ratio, it's come off. So that's one positive. On a sequential basis, we're seeing the claims ratio fall, which is one of the other positives which the market is picking up. The other one is the combined. While on a YOY basis, the combined has spiked. That's the only likely negative. The combined on a QOQ basis has come down. The YOY spike is also to a certain extent attributed to expenses of management. Some control there may be required. That's the only possible negative. Where market share is concerned, they've gained market share across products. So that's the other key positive. So across the board, it looks like a good set with a couple of negatives as part of that set. So something to look out for where Go Digit is concerned. Where Fedbank is concerned, well, again, it's all about credit costs, right? So Fedbank is seeing a taper down with regard to credit costs. We saw a 20 basis point reduction on the credit cost number on a QOQ basis. 0.8% is where the credit cost number came in at. Mind you, credit cost is nothing but provisioning which has been done in this quarter. So that lower provisioning is actually aiding the numbers. Margins also seeing a bit of a shrink, but that has been brushed off by the street because we saw margins bump up as well in equal measure at the end of Q4. So margins coming off, not been taken as adversely, but just everyone has their eyes on that gross and net NPA number, which is absolutely flat sequentially. So all of those positives getting built in already in the stock price. Mind you, the book value today is at 71 rupees a share. So at 130 rupees after the 6% bump up as well, we're starting to see around 1.8% trailing 12 months price to book. Something to, of course, keep in mind. So broadly, that's on Fedbank and Go Digit.
Well, thanks so much for that, Harsh. And, Prashant, let me come to you on both these aspects, because while the insurance space has been doing well, Go Digit, a new listing, has been slightly impacted in numbers. What do you make of that as well? And what's your view on Fedbank as well? Because it's a stock which saw deep corrections going all the way to the 90 rupee mark and now seeing some kind of pullback from those levels. How do you view this one as well?
Yes, with respect to Go Digit, again, very positive to see such kind of numbers. If you see last 10 quarters, this is the first time they have done a very good numbers in terms of their operating margins, which is almost near 7%. Last quarter, there was some kind of loss. There was a negative 8% margin on the numbers. So financially, I think there is some kind of turnaround being seen in the insurance business. Even the claim ratios are coming down. So overall, the yield out of this company is getting positively very soon. So this stock, even the performance have been very positive. So on the valuation side, still some kind of expensive considering the growth going forward on a quarter-on-quarter basis. So I would like to have a very wait and watch for this rally. Anywhere between 340 and 320 can be a range where Go Digit looks very good for me on a long-term basis. With respect to Fedbank, again, the stock has really done well. But again, I would like to wait and watch the way how the stock has rallied in last 1.5 months. So the business of gold is giving some kind of comfort level for them. But yes, margins have been very much slightly under pressure, which was expected in the industry also. But I think the correction can be expected going forward because again, the next quarter cannot be same as it was in the Q1.
Would you concur with the view on Fedbank? Because, I mentioned it's recovered very well on a YOY basis, just a 5% returns that the stock has given. But do you see more legs on this rally? Vinay, can you hear me?
Yeah, I can hear you.
Go ahead.
Yeah, so basically the stock has risen a lot from the lower level. So 80 was the bottom in the April 2025. It has this month it has reached to 133. If I were to look at the chart, though the history is less, but if I were to look at the period which was there in the April 2024, it attempted a recovery from lower level at that time. So at that time from 109 it went up to 133.50. So that was a swing high. So from 133 it came down to 80 in 2025. So 133, 134 is a very strong resistance, is a swing high which was made in April 2024. So after rising this much, now stock has reached to the crucial resistance zone. We need to track this level closely, whether this 134 level is getting crossed or not on sustainable basis. Then only one should take a fresh bullish view. But till then we can take up a profit booking sign here, or otherwise we can do one thing, we can decide one trailing stop loss in this counter. So that would be the best strategy in this kind of market when trend is positive and stock has reached to the long-term resistance. So better to hold this stock with a trailing stop loss of 122 as of now, because 122 was the yesterday's low and should act as a strong support. So I would suggest hold with the trailing stop loss of 122.
So that's what Fed Bank. But moving on, Arvind, let's just pull up that one on the screens. The company has just reported numbers. A strong set. EBITDA has seen an uptick of nearly 18% on a consolidated basis. Let's look at the margin picture as well, an improvement as well. 8.8% versus a 8.2% is what you're seeing on a year-on-year basis. Profits have jumped around 35 to 36% this time around. That's with regards to where Arvind goes. A strong set of numbers that have been reported, on the back of which, if you see, the stock has seen a good spike as of now. There was no major expectation on this, but at least at the face of it, the numbers are looking absolutely strong. We just have the four numbers which are flashing at the bottom of your screens. Apart from that, Voltam Transformers also has reported numbers. 79 to 78 crores is what you're picking up. It's a flat number in terms of profitability with regards to where Voltam Transformers goes overall. So no major reaction there. In fact, the stock is now nosediving as we speak from the day's highest levels. Let's see where this comes in. No major other number coming in on a Voltam Transformers. But shifting focus, or let me actually take a question with Prashant and Arvind. Prashant, how are you looking at Arvind? A strong set of numbers, a good amount of margin expansion that you've seen as well. And the only overhang right now is with regards to what happens with the US in terms of tariffs. But what would your advice be for Arvind?
I think yes, very decent positive numbers which have been delivered today. There was some kind of very much flat expectations. I think it has been better than expected numbers. So this stock is trading very positive. One good thing again in these markets, a improvement in the EBITDA has been rewarded by the price action on the positive side. Yes, the concern still remains. I think we are at the corner of the momentum with the tariff war. So textiles will remain on a very crucial watch list, but despite having a good deal with the UK as a country. But again, very positively, I think the overhang will go ahead very soon this weekend. And the stock is still showing some kind of strong strength in terms of their business economics. So the stock can do really well, and long term is very positive on that. Comfort level with respect to valuations also, I think a 20 forward P and a price to book valuation of 2 is very comfortable for textile companies to outperform well.
So that's with regards to Arvind. But shifting focus, defense stocks have been under pressure. And this is over the last couple of trading sessions since the time the numbers have been announced as well. And you can clearly see in terms of individual counters. Anushi is with us to tell us what's happening with the defense space, taking into consideration a weak set of numbers.
Hi Hiral. So, as you can see right at the top of the screen, some of the key draggers that we are looking at for the defense names. Now, they are on the basis of the Q1 FY26 results reaction that we are looking at. First off, I'll start with Masgao Dock, which is the more recent name that we are looking at. Here, the main impact was on the margin front. If you are looking at provisions, higher provisions, this is something that we saw last quarter also playing into effect has resulted in a margin contraction of almost from 11.5% compared to 27% last time, and this is on account of two of their contracts in which they had been incurring losses for which they have made these provisions that we are looking at. In fact, if you look at revenue also, that was up over 11%. Net profit, however, saw out 35% of an impact. Zen Technologies now is the other stock in focus. Now it has been locked in a lower circuit for the last two trading sessions after its Q1 results. Now here, if you are looking at now, overall commentary is remains important in terms of the order inflow side, which has been muted for the 5th quarter in a row, because of which we see this impact playing out. In fact, if you look at the revenue also, lower execution also impacted the revenue. Now that was down about 38%, EBITDA down about 42%, margins have slid to the level of 41% as compared to 44%, while net profit also saw about a similar kind of a dip that we are looking at. So it's the order inflows trajectory, especially after the government also announced emergency procurement. So Q2 is something that we'll await for in terms of sequential improvement on that basis. Bharat Electronics, despite posting an overall beat in terms of where the margins were concerned, it was revenue growth which was a miss. But if you look at the overall guidance given by the brokerages, and we'll wait for the management commentary also, that remains on healthier side. But the stock did take a beating as well in terms of where the ratings are concerned. Paras Defense also, post its Q1 result, it has been seeing some cuts in terms of where the numbers have come out.
So much for that one. Anushi, stay with us. We will come back to you for L&T, but before that, Puneet will take us through Amber as well. But very quickly, Prashant, a quick view in terms of defense companies taking the weakness that we've seen in the first quarter. Are you expecting this to continue, or will there be a turnaround?
I think yes, again, H1 will continue to have some kind of pressure in the EBITDA margins. That was a major concern in the sector as well, where we see some kind of execution risk from last 6 months. So that has been seen in the Q1 earnings. A pressure on the EBITDA margins will obviously continue in Q2 also. We can see some kind of normalization with respect to their EBITDA margins in the H2 segment. So overall, valuations are expensive. Numbers are not so matching with the earning growth. So there can be some kind of continuous pressure in the sector overall. So I think in this space again, BL can be one stock one should look at on a long-term basis, but rest other stocks are still seeing some kind of good cuts in the price action.
Right. Vinay, very quickly, any technical play from the defense pack that you would recommend?
Yeah, so the one stock which has fallen a lot is the HAL, Hindustan Aeronautics Stores. Today it found support near its 200 days EMA, and hammer candlestick pattern is there. So around 44831 can look at it. Today's low should be the stop loss in trading long position. The 4400 is today's low. So one should have that stop loss and can have a positive view on that.
Got the Vinay, but just addressing the numbers on the bottom of the screen right now, Amber Enterprises has positively surprised on the profits, while there's been some blip in terms of the EBITDA margin. So the revenue is coming at 3,449 crores. This is a stellar number to say the least, because we were going with a number of 2,642 crores, and that's largely led by what the company has done essentially in this particular quarter because of the consumer division as well. So that is one of the other aspects as well. Now, apart from that, the margins are up to 31% at 257 crores. This brings the total absolute margins at 7.4%. Expectation was of 7.7%, but I think the street will react positively to these numbers, largely because of expectations of the consumer division not doing very well in this quarter, and that's largely led by the ECs for Amber Enterprises. Profit as well has come in at 104 crores versus expectation of 76 crores. So we're seeing that sharp up move on Amber as of now, and hence we're seeing that strong reaction as well. But the other one stock in the consumption space in focus is Varun Beverages. Now the numbers have come in just about a couple of hours ago. Let's get in my colleague Mahima to give us a breakdown of what worked for Varun Beverages in this particular quarter. Mahima.
Right, so I think overall it's been a flat set of numbers, flat quarter for Varun Beverages overall. They follow calendar years, so it's Q2 numbers for them. Revenues have been impacted by unseasonal monsoons and short summers, so that's a major overhang. In terms of volume growth, it's been good in international business, and that has kind of surged the uptick in terms of the overall volumes as well. EBITDA margins have improved on account of good operational efficiencies. Company is now almost debt free after paying the debt through its QIP. Net realization has also improved again on the back of the growth that the international business has seen. Now in terms of numbers, revenue down 2.5%, EBITDA down 0.4%, so almost flat there. Margins have improved at 28.5% versus that of 27.7%, and net profit saw a surge of around 5%. In terms of key operational metrics, overall volumes down 3%, but the street was expecting that it will be down by around 5%, so it's slightly better than what the street was expecting. India volumes declined by 7%, international volumes grew by 15%. Net realization per case improved by around 0.5%, largely and mainly because of the international business. Net realization was driven by the international business by around 6.6%. In terms of key developments, they've appointed Pankaj Madan as CFO with effect from 30th of July. They're set to incorporate a JV to manufacture refrigeration equipment, and the company has acquired 50% equity in Everest Industrials Lanka as well. Lastly, in terms of key development with respect to where the capex stands, commissioning of new production facilities at Prayagraj, Buxar, Damtal as well as Mindi Pathar has taken place, and Varun Beverages Morocco in South Africa has overall started commercial production of Cheetos as well. So this is the overall view of how earnings have panned out for Varun Beverages. I think the stock is seeing an uptake only because of the kind of volume that has come in. It's better than what the street was expecting, and that's why we're seeing the uptake in stock.
Gautam, Mahima, thanks so much for that. Prashant, I know very recent number reactions coming in on Amber as well as Varun Beverages. Do you see any kind of positive aspects from both these results?
I think considering these two, Varun Beverages can be a better stock. One should look at considering the better than expected numbers with respect to their volumes, as well as on the stock which has consolidated last few months. So the numbers are giving some kind of confidence. The worst is behind the stock in terms of margins as well as the growth. So I will choose Varun Beverages, one of the stock which can be a stock one can buy for long term on the current levels. Even valuations are some kind of comfort, and Q1 earnings were a little bit giving comfort for a fundamental analyst to have an outlook on a positive way.
That's an interesting pick coming in there. But staying with the consumption pack, Asian Paints will be reporting numbers today. I think it's a no major surprise where the quarter is expected to be yet again muted. I think only a positive surprises that could come in. Mahima is with us to tell us more. Mahima, what are you picking up? Because it's going to be interesting in terms of how they're able to change strategy as well from here on the market share that they've been losing.
Right, so Hiral, I think this quarter also is set to be a disappointment for Asian Paints. It's going to be a muted quarter overall. And I mean, if we take a look at the overall estimates, revenue is expected to be flat, almost flat. EBITDA may fall around 2%. Net margins might slid a tad bit, and net profit may fall around 5%. In terms of what you can expect, overall urban demand continues to be under pressure, and because Asian Paints has its major presence in the tier 1 cities, it will be impacted the most amongst the paint companies. Margins under pressure because of inflation going up. There's price hikes which will kind of offset the inflationary pressure, but we'll have to see how that volume versus value growth has been like. Rising competition with peers has always been a problem in the paint space in the past few odd quarters, and that is something we'll have to watch out for as to how market share pans for Asian Paints as well. And it's expected that because urban demand is under pressure, it will kind of underperform its peers. Now in terms of key monitorables, I think what I would want to know is how management uses the proceeds it's received from AkzoNobel's stake sale, and how that will be put to use, and overall demand outlook in price hikes picture and competition, of course.
So that's with regards to Asian Paints. We have Anushi who's also standing by. Anushi, L&T has already got a mega order today, plus the results are expected today. What are you expecting? Because the stock is at the day's highs ahead of the numbers.
It's a 15,000 crore of a plus order that we are looking at, and this is in the hydrocarbon business in Middle East that we are seeing. So of course that is an important monitorable that we should be watching out for the results today on what the order prospect pipeline is from that division coming up. But basically walking through the headline numbers, if we see the revenue is expected to see a 14% of a growth, margins expected to remain majorly flat, while net profit will see about a 22% of a growth. What we should be watching out for firstly is the order pipeline, especially in the domestic as well as the international business. business that we'll be seeing. Now, deferred domestic tendering, how that would impact the revenue growth is something also that we should be watching out for, considering that order inflow growth last year already had a high base effect. So that is something that we should be seeing. Other than that, even if you look at the EBITDA margins, how it would perform in terms of the expectation is flat margins this time. So it's majorly on that basis whether the project and manufacturing business, whether they'll keep the core margins going on. Just to reiterate the guidance that is given, the order inflows are expected to see about a 10% growth in FY26, while revenues will see a 15% of a growth, while core margins are expected to be in the range of 8.5%. So results majorly in line with what the FY26 guidance is given.
Thanks so much for that, Anushi. But Prashant as well as Vinay, thanks so much for joining in, giving us perspective on a bunch of stocks. But viewers, that's all the time we have on this edition of Profit Buzzer. Stay tuned to NDTV Profit for more.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
that?
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, if you look at the markets, the Nifty that has found some support near the 24,600 level and has managed to gain nearly 100 points from day's lowest point, while the Nifty Bank Index that continues to trade flat. But let's go across to Hiral to understand what's been buzzing when it comes to the small cap space.
Thank you, Somit, for that. So let's quickly look at what's happening in the broader markets. Let's pull up BSE small cap and then NSE small cap 250 as well. You've seen from the day's lowest levels, you have BSE small cap also, which has climbed to the day's highs, now seeing gains of 0.6%. Likewise, if you see NSE small cap 250 as well, a similar trend there at the day's highest levels with gains of around 0.4% coming in there. Let's look at individual stocks from here on. Firstly, Tata Chemicals on the back of a Morgan Stanley upgrade. That stock is seeing some smart moves today. 6.5% up move has continued on that moving edge. On the back of earnings, a couple of companies that have been buzzing today as well. Happiest Minds, that stock is seeing some smart moves. Go Digit on the back of earnings, as well as Birla Soft, again earnings reaction. Punjab Chemicals, Paradip Phosphate, Apar Industries, all of them also buzzing on the back of numbers. Punjab Chemicals 13%. If you talk about Arvind Fashion, numbers have just been reported, 7.5% up move, and Apar numbers have come in the last half an hour of trade, a 10% up move coming in on Apar Industries as well. Let's look at few of the other names. Senores, the numbers were strong earlier. In fact, now there has been inspection at the Georgia facility, but in spite of that, today that stock is seeing some smart moves, 8 to 9% up move coming in on Senores Pharmaceuticals. Navkar Corp and Good Luck are few of the other buzzers from the broader markets as well. Smart moves on Navkar Corp. And if you talk about Good Luck, 11% up move here. Manorama Aeroflex, let's pull up both these counters as well and you'll see the kind of moves that are coming in on these two because the volumes are also pretty strong. Manorama 7.5% downtick, one of the top losers there. Aeroflex as well, 8 to 9% kind of downtick, so one of the top losers in the broader markets. Let's pull up a 5-day chart of SML Isuzu. If you see the 5-day move on this one in the week, today the stock is down 5%, but the trajectory has been slightly weak, 2.5% marginal uptick there. Paras Defense also is another one. If you see the 5-day, 16-17% is the kind of downtick that you've seen on the Paras Defense. Zen Technologies as well. In the last 5 trading sessions, similar kind of downtick that you've seen on the Zen Technologies as well. And a Home First, which reported numbers over the weekend, but yes, since yesterday's session, that downtick that has come in, 6% there, and today as well, 5.5% downtick on a Home First. So lots of buzzers in the small cap space, and I think a detailed discussion that Somit and Anushi will take you through. Over to you, Somit.
Well, thank you for that, Hiral. So, as we are seeing a lot of these names that have been buzzing are on the back of the first quarter results that we are looking at. In fact, a company which, came out with their numbers, and it's a strong set of numbers that we're looking at, is Garuda Construction. Now, just to give a sense on the company, now it's a end-to-end civil construction company engaged in residential, commercial, as well as infrastructure related projects. If you look at the order book, as of Jan 25, if we are seeing the last value, that stood at around 2,830 crore. In the first quarter, the company saw about a 256% of a jump in terms of where the revenues are concerned, but margins stood at 29%. But to discuss more on this front, we are joined by Praveen Kumar Agarwal, the Managing Director and Chairperson of Garuda Construction and Engineering. First of all, Mr. Kumar, welcome to the show. I want to first get a sense in terms of how the company's journey has been in terms of, its listing in October 24. Now we are seeing the Q1 results as well, wherein you've seen about a significant uptick in terms of where the revenue and PAT number is concerned, but it's the EBITDA wherein that number we are seeing at the levels of 29%.
Yes, thank you. Thank you for having me. Thank you very much. So basically this has been consistent, and we are a bottom line based company. We focus too much on bottom line. We don't run after top line or order book. That has been our forte, and that has been our focus. So we are very concerned about our bottom line, and that is what you are seeing.
Okay, so in terms of, if we look just concentrating in terms of the bottom line is, what you're emphasizing on. In the last 2-3 fiscals, we've seen the margins have ranged in the 30 to 33% of a range. This time in the first quarter, we are seeing 29% of a mark. Just want to get a sense in terms of your margins, if you can give us a breakup between your segments, how margins differ across that, and what's the sustainable kind of picture that we should be looking forward?
Yeah, so a little bit here and there is all right, because we are into civil construction. We are not selling a commodity. So a little bit here and there, but basically it will be around this range. We will maintain this range, and that is what we have been doing all the while. Okay. So we bid accordingly. We bid according to this margin, and we don't bid very low. We don't take projects just for the sake of getting the projects. We take projects if we feel we can make a decent amount of profit there. And we are a debt-free company. That is most important. We don't have a capital cost. We don't have any cash flow problems. We don't have any CC limits. So we don't have any interest cost, basically, if you see in our balance sheet.
And is that the position that you expect to maintain forward as well? You'll continue to remain debt-free?
Yes, hopefully, yes. That is what God wish. We are focusing on that, and we'll maintain that.
Okay, and in terms of where the other metrics are concerned, in terms of your revenues, margins, you said that they will sustain more or less in the same picture. What is the kind of sense in terms of revenue growth that we can expect for the next 2 to 3 years?
Yeah, actually, as our order book stands at around approximately 3,000 crores, and we are also bidding for new projects. We might get a new project very soon, but I can declare only when we actually win a bid. So our order book presently is at 3,000 crores, which we have to complete in 3 years' time or before that. We have been known to complete projects before time. So we will be surely looking at completing these projects also before time, and as our order book grows, so you can calculate how much we are going to grow.
Right, so as you were mentioning that you have an order book of close to 3,000 crore rupees, if you could give us some guidance of how are you seeing this order book growth going forward, and who are your clients here? How much of these orders are coming from private players, how much from government, and if you could just give us more details on your clientele as well.
Yeah. So now going forward, this at present around 60-65% is from the government, and rest is from private. But going forward, we are looking for more focused projects, like very niche projects. We are only doing niche projects. We are not going into Me Too projects. It's not general type of projects. We are doing convention centers. We are doing malls. We are doing sports cities, stadiums, like that. So it's a very separate segment that we are focusing on. So there are very few players who think like us, like we are a build, operate, transfer basis projects. So we are more of a barter project or a BOT project, a specialized company into very niche segments where not too many people want to participate.
Mr. Agarwal, if I just take your order book in context now, that you said that it stands at the levels of 3,000 crore or odd so, which brings your book to bill ratio of more than 10 times. Just want to get a sense in terms of how the execution is expected to shape up. How much of your order book is to be executed in FY26? And is that the number that you expect to sustain even going forward, 10x of a book to bill ratio?
Yeah, if you see last year, our order book was very small. Then we went into IPO, we got funds. Even that time we were debt free. Even today we are debt free. And we want to sustain this debt free nature. So now that we have got funds, we have working capital. So we going forward, we should be doing if you see from last year, this quarter, we are almost going double. So this has to be growth has to be sustained because we have to complete the projects on time. So this growth momentum will sustain definitely.
Okay, and in terms of your IPO also, when we were looking at one of the key reasons for the proceeds to be used towards the working capital. So just want to get a picture on that as well, if you're seeing an improvement in terms of where the net working capital days are concerned, or how is that shaping up?
No, as I told you, we are a BOT based company. So we in fact fund our own projects also. So that is why we whatever working capital shortage was there, that was met by the IPO. So now we have greater leverage so that we can we are in fact funding our projects also. So there's a little bit of working capital extra requirement. So that is now sustained.
So mainly, if we look at your overall presence, that was firstly concentrated in the MMR Maharashtra regions, and now you're expanding your presence to other states as well. Give us an outlook in terms of your current ongoing projects. How many of that are there, and what is your plans in terms of expansion forward?
Yes, so just now we are present in 3 states. We are doing. We were a Maharashtra-based company. We went to Rajasthan. We are doing an industrial project there. Then we went to UP. That is first time we went to UP. Gorakhpur, we have got the key projects there. We are building a convention center there, and we are doing a sports city of 227 acres there. This is for the Gorakhpur Development Authority. So we have shifted our focus not to based in Maharashtra itself. And so going forward, we are trying for a project in MP. So maybe we'll win it. So we'll announce it. So yeah, so we don't want to go many places, but at least 3-4 states we can definitely do. We are doing a small project now in Delhi. We have completed a big project. We are going in for more bidding into Delhi. So yeah, 4-5 states will concentrate.
Right, sir. So as you were mentioning that after the IPO, you're not facing any working capital issue. But earlier, I believe the working capital was because of some delayed payments from government project. Is that issue still continuing from the government side? Are payments being delayed?
No, there's nothing. No, there's nothing.
Okay.
Okay, so
it's all very cool. Yeah.
Okay, so that's a relief that we are looking at in terms of that. Now, just that brings me to my final question regarding your bidding pipeline. You know, you talked about the expansion plans in other states. Just want to understand your positioning towards competition. If we have to look at what is the kind of success rate that you have when you bid for a project?
Yeah, if you see, we are not bidding into the normal projects. So generally, we have 3 or 4 parties who bid with us. So that so our success rate when we bid, we are at least 1 out of 4 bidding we win. Generally, yeah. So we have been choosing our bidding strategy very well. We are focusing on what to bid and what not to bid. We are just not going to bid for everything.
Well, that would be all, Mr. Agarwal. Thank you for joining us and explaining your company in detail. Well, that was the management of Garuda Construction. With that, let's also welcome in our guest for the show today, Lancelot Dicona, a CIO from ValueX Wealth Connect. Lancelot, any views on this counter Garuda Construction? The numbers were strong. The management is confident of more order wins going forward.
So, I think while numbers are strong in terms of order book and execution, what one has to understand is that when you do build, own and, build, operate and transfer projects, the investment actually is very large in that, in the actual construction. So rather than other plain EPC, pure EPC contractors, pure EPC contractors would actually do a project and get paid for it, and that would then generate a profit. In this case, the profit actually can be seen only after the project is transferred, because at the time of construction, while they're building the building out the project, they're showing it as income. It's actually their own investment going into it. So unless that investment gets released over a period of time, when they actually transfer the project, that's when you would actually see the benefit. So I think on the other hand, this also issue with regard to zero debt, it brings down the return on equity, because the entire money from equity shareholders gets deployed back into the company. Rather than that, it is always better to take some amount of leverage, which your profit margin can easily sustain, pay off the interest, and the additional revenues or profits that are generated go towards the equity shareholders. So from a business model wise, that is a better option. And I think given the size of the order book, one will see a much larger investment needed, and at some point in time, company will have to start raising debt in order to finance this. And the actual profitability of the company will come out only when the projects are transferred, which may be many years down the road, and that would really reflect the profitability at that time.
Okay, so that's the view for Garuda Constructions that we are seeing. Thanks for that, Lancelot. But let's shift focus. There are a couple of fertilizers and agrochem companies which are buzzing in trade today, and Varsha joins us with a detailed list on same and why and what are the potential reasons as to why we are seeing this buzz.
Thank you so much for that. So all the three companies that I'm going to talk about are buzzing on the back of Q1 FY26 numbers. Let me start with Punjab Chemicals and Crop Protection, wherein if you see good set of numbers, the net profit, huge uptick in net profit that you're seeing is led by higher other income. And also they've signed 3 exclusive MOUs with overseas customers for high value agrochemical products, and they expect the revenue from these 3 MOUs of around 120 to 150 crores over the next 2 to 3 years. This is huge for a company like Punjab Chemicals. Just to speak about the numbers, EBITDA was up, if you see, 25%, margins were at 11% versus 11.3% last year, and net profit was at 20 crore versus 13 crore last year, which is up 54%. Next on the list is Mangalore Chemicals and Fertilizers. Again, overall good set of numbers. If you see, ammonia and urea plants operated continuously throughout the quarter for the company, and the urea production, if you see, were at 1,22,499 metric tons for the quarter. And if you see, the revenue was up only 5.9%, but net profit was up 40% because lower tax aided net profit for the company, and margins were 12.8% versus 12.9% last year. Highlighting stock of the day, I would say today, is Paradeep Phosphates. Very good set of numbers. If you see, revenue was up 58%, but EBITDA margin impact that you're seeing is led by operational leverage, because the costs have not gone up, but your revenue has increased, and that has led to the EBITDA margin expansion due to operating leverage. Other income and lower tax have aided net profit for the company. Now overall, if you see, all the 3 companies that I have talked about are into fertilizers and chemical sector, especially into fertilizers, and good monsoon this time has actually helped these companies to have a good numbers, because sufficient rainfall from the monsoon directly supports agriculture productivity, and because of this there's high demand of fertilizers from farmers because of good monsoon in any quarter. And Kharif cropping season sees significant boost when it comes to fertilizer consumption. So overall, because of good monsoon and because of operating leverage that these companies have seen, have led to good kind of numbers when it comes to all these 3 companies.
Okay, thank you for that, Varsha. So, one interesting name which popped out is Punjab Chemicals and Crop Protection, and particularly the segment that Varsha emphasized was on agrochemical products, wherein they're seeing about 120 to 150 crore of sales in the next 3 years. Lancelot, your view regarding this company?
So, the company is trading at quite, an expensive price earnings. It's almost 31 times its earnings. And while the industry has done well and the company has done well in the last quarter, I think we've seen that these companies do take a lot longer in order to, for the orders to fructify. So though they are entered into an MOU with 2 overseas companies for the molecules to be developed, it takes a year or 2 before the revenues and profits creep in. But looks like the stock is already pricing in, the potential upside, and that can be, a bit risky, because when you have a potential upside already being factored into the price, and if there is any negative surprise, the stock can re-rate as sharply as it has risen, and that could result in a bit of an issue. So I think if one has to look at this company, while it appears to be, the prospects are good, I think the valuation is expensive, and maybe one can look at it at on a correction.
Right, Lancelot. Then what would be your top pick when it comes to the fertilizer and chemical space currently?
Actually, in terms of the chemical space, I would go with Tata Chemicals still. They are one of the leaders in the space, and you are seeing a good amount of improvement in the profitability as well for them. And if you consider, even the results should be much better going forward. So valuations also are reasonable. So one can look at Tata Chemicals in this space as opposed to many of the smaller companies in the place.
Yet another stock that remains in focus is Jaiswal Nico. The stock has hit an upper circuit of 20% after a couple of large block deals that have happened in the last couple of sessions. Once is joining us with more details on the same.
Right. So if we talk about the business of the company is engaged in the business of pig iron, sponge iron and pellets, etc. Now an asset care and reconstruction company holds 25.86% stake in the company as of June 2025. Now let's understand the overall scenario. So company had a substantial debt that became NPAs for the banks, and the asset reconstruction company acquired almost the entire distressed debt from the banks and then worked on the restructuring of the company's debt. Now subsequently, company secured a 3,200 crore debt from other financial institutions in December 2023, and this involvement of ARC has led to successful debt restructuring in the company. Now followed up by this, there has been continuous selling by the asset reconstruction company. As we can see on the screen, the asset reconstruction company has sold substantial stake in the company. Also, yesterday Shubham Capital bought 53 lakh shares in the company. Now it's important to note that Shubham Capital is a part of promoter entity which owns 14% stake in Shyam Metallics. Also, if you look at the margin trajectory of the company, the margins have increased from 11% in June 2024 to 19% in June 2025. So this is what the overall picture is shaping up for the stock.
Right. Well, Lancelot, any views on this counter, Jaiswal Nico? The stock has hit an upper circuit of 20%, a big block or a big overhang of selling that was expected from ARC is being done right now.
I think, post the restructuring, and the company is, trying to get out of its past history, but, the return on equity is fairly low in this nature of business. And, this particular automotive components can also take a bit of beating when there are higher input prices, etc. So it does give you a lot of, there are a lot of risks in buying into this price when the price has rallied recently, and it's, probably trading at about 20 times its forward earnings. So it still is a little high, and one should be a little bit careful about picking it up, because it's hit upper circuit, as you said, and could continue for a while. So you do not want to get into a company when, when its momentum is totally making valuations go, haywire.
Okay, so continue to remain cautious on this counter. But apart from that, Flair Writing is another stock that you should be watching out for. And this is again on the back of the first quarter numbers. How the overall quarter went by. Mahima joins in with more details on this.
Right, so Anushi, it's been a good quarter for Flair Writing. Double-digit growth across metrics, revenue, EBITDA as well as PAT. In terms of what's worked for the company this quarter, creative segments have continued to see good momentum growth. Launched 22 new products this quarter. That is also something that is started to augur the top line. In terms of the numbers, revenue saw an uptick of 17%, EBITDA saw an uptick of 18%, EBITDA margins up to almost 17% from that 16.8 mark, and net profit up almost 8%. In terms of the business performance, the domestic owned brands saw an uptick of around 23% in terms of sales. Export owned brands saw an uptick of around 24%. So overall, combined consolidated growth of around 23% when it comes to the business mix. stocks. Segmental performance, pens revenue saw a growth of only 3%, so single digit growth there. That was a disappointing metric, but overall creative segments has seen a growth of 77%, and this is on the back of a lower base as well. Steel bottles, houseware revenue grew 55%, again on the back of a lower base, but it's these ancillaries that are actually now auguring growth for Flair Writing. Lastly, in terms of capex, FY26, they've guided a capex for 80 to 90 crores, out of which 26 crores they've already done in Q1 FY26. So this is the overall view of how Q1 panned out for Flair Writing and why it's buzzing in trade today.
Okay, thank you for that, Mahima. So that's the overall picture that we are seeing for Flair Writing. The stock up over 8% in trade currently. But with that, we'll also like to thank Lancelot for joining us. But with that, it's a wrap for this edition of Profit or Small Cap Buzzers that we are seeing.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
You're watching India Market Close. I'm Mahima Vachajani and with me is Neeraj Shah. Well, before we move on to what we've planned for you on the show today, let's take a quick look on how the markets are doing. Well, the Nifty 50 is up around 0.4% as we speak. So in green today. The Nifty Bank also seeing slight uptick about 0.2 odd percent. So, partially green there as well. Let's also take a look at the Nifty heat map because that is going to be an interesting one. There is SBI Life which is seeing downtick of around 1.4 odd percent. Axis Bank still seeing that continued pressure down by about 0.8 odd percent. Asian Paints ahead of its earnings, slightly under pressure. Geo Finance is the top gainer, up 4%. L&T ahead of its results again, up 2% and on the back of that 15,000 crore order win. Bharti Airtel doing fairly well in trade today, up 1.6%, followed by Bajaj Finance, Apollo Hospitals, Adani Ports, Tata Motors as well as Adani Enterprises. A lot of Adani names doing well in trade as well. Tata Steel results expected tomorrow, but stock seeing gains of about 1 odd percent. Reliance also gaining by about 1 odd percent as well. Let's try to pull up the advanced decline ratio because the action really is in the broader end of spectrum. It's a very earning specific markets and we're seeing a kind of tug of war when it comes to the advanced decline ratio. There's around 1500 odd advances right now versus that of 760 odd decline. So it's almost a 2:1 ratio when it comes to where advances and decline ratio stands. But yes, a tug of war situation here. Let's also try to pull up the sectoral heat map and see what counters are seeing gains. Well, all counters in the red. There's Nifty Realty which has bounced back in green after seeing a lot of profit booking yesterday. Nifty Pharma up 1%. Nifty Metal also seeing gains of about 1 odd percent. Nifty Metal seeing good gains. There's Nifty Oil and Gas, Nifty Auto. That's seeing gains of about 0.7 odd percent, but Nifty IT almost flat there. Nifty Private Banks also not doing much. Nifty FMCG also not doing much, flat in trade. Nifty Banks slightly seeing gains of about 0.3 odd percent. Let's also try to pull up the broader markets and see what they are doing in trade today. The mid cap 150 and the small cap 250. It's a very earning specific market as I mentioned. The mid cap 150 up 0.7% at its day's high point. The small cap 250 up by about 0.6% as well, again at its day's high point. Let's try to quickly pull up the NSE 500 and see what counters are buzzing there. There you go. There is Apar Industries seeing gains of over 12 odd percent. Tata Chemicals on the back of the brokerage note. Rallis India seeing gains of about 5.7 odd percent. Birla Soft, JB Chemicals, Tanla Platforms all seeing gains of about 5 odd percent. But something that's not doing well on the flip side, we have Home First, which is down 5 odd percent. Lakshmi Organic, Canfin Homes, 5-star, Zydus Wellness, some counters that are under pressure. So this is with regards to where the broader market stands. But Neeraj, anything that you are picking up, anything that you are liking right now? It's very earning specific, as I've mentioned on the show earlier as well. What are you picking up?
Yeah, Mahima, good afternoon firstly. And, I'm just glad that in the morning when we spoke about this on the trade setup, we were talking about the fact, viewers, that if the PCR, Nifty PCR was at 0.65, select quant indicators were talking about the possibility of the markets being in an extreme fear zone and a bounce back likely. I think that has played out, and which is actually a really good thing. Now, what pockets are moving today? There is a bit of a bounce in real estate, and that is something to note, because real estate was under this extreme pressure the last few days. And look at what some of these stocks have done. Lodha is up 3.5%, Oberoi about 3%, and these are the stocks that got really punished when Invesco sold out from those funds. And today we're seeing a bit of a bounce in those funds, so which is actually a pretty good sign. There is, of course, the likes of DLF, Godrej Properties, Anantraj, etc. doing well, which is a good thing, but it's predominantly the sold out real estate names which are actually doing very well for themselves. Pharma has taken a bit of a back seat. The big mover of the last few days, Laurus Labs, is correcting, and rightfully so, has had such a mammoth rally that in some sense, some bit of a cool off. Actually, sorry, I stand corrected. Even there is a bit of a bounce that has happened. But some of the others, the Piramal Pharma, etc., are kind of a bit soft in trade today. The Paras Defense is down about 5.5%. Bajaj Healthcare, despite giving fairly positive commentary about the quarters ahead, is down about 5%. There is weakness in Zentech as well. So that defense side of the market isn't quite necessarily looking very, very strong. But on the flip side, like we said, some real estate, some chemicals, select pharma are doing very well for themselves. Apar Industries is doing very well for them itself. And I think that's the bucket that we're going to keep a keen eye out for. Kush Bora, founder of kushbora.com, with us on the show. Kush, great having you. Thanks for joining in. Kush, I don't know how you think about this, but I would love to know. I mean, we are 0.5% up. It's not like we've really regained a lot of lost ground. But this morning, the Nifty PCR at 0.65, etc., was all giving some signs that there is a possibility that we could bounce. We have shown that little bit of a bounce. Is this sustainable? Would you go out and initiate fresh longs at these levels?
Hi, Neeraj. First of all, very good afternoon, and spot on. I mean, this is exactly what we've been discussing. I think, since yesterday, that we've seen index and the indicators at oversold or close to oversold territories, and yet that rebound remained elusive. It was perhaps a matter of time before it came about. Could have been yesterday. Just came about today. My sense regarding the sustainability of this bounce, not a very confident one. The reason being that we've seen a sharp sell-off on the way down for the last 3 sessions at least, but on the way up, even the volumes, if you see, and the moves in terms of the pure price action you see, has not really been so sustainable. Mind you, that said, this short covering bounce itself has the firepower, to take Nifty at least to 24,900 and 25,000 levels, because we are so heavily short on the index. We have been for a better part of this month. So up until 24,900, 25,000, I don't think, even if the Nifty moves to those levels, it will be a surprise. What is crucial is sustainability around those levels and moving higher from there, which remains a question mark. And I'll let the price action confirm that before perhaps changing my view. So yes, this short covering bounce could well continue. In fact, yesterday also, if you recall, I mean, the one thing that we mentioned, that the only trade in town is to actually play for a short covering bounce. Didn't come about yesterday. We're seeing that today. That view still remains. So with the stop loss around the low point of the day that the Nifty has made today, you could initiate a long position for levels of 24,900, 25,000. And my suggestion would be keep taking profits as in when you get, rather quickly. Be a little nimble-footed, be a little swift, because what we're seeing right now is a short covering bounce and perhaps continuation of that today or maybe in the next couple of sessions as well.
What about the Bank Nifty, Kush? It's trading within that range of 600 odd points, up 0.3% as we speak. But is there any trade there that you're seeing?
Sure. Hi, Mahima. See, what's happened here is that the conviction in the Bank Nifty was fairly strong up until 2 sessions ago. What happened 2 sessions ago is that further weakness, be it on account of the dismal results by a Kotak, which dragged the Bank Nifty below the 50-day moving average, which it was holding up for some time, that actually disturbed the structure a little. If I were to take that short covering trade that I spoke of just a while ago, I would actually prefer to trade or take that trade on the Nifty, because we've seen a very heavy shorting on the Nifty. Bank Nifty not so much. So Bank Nifty could consolidate between this 56, and if I can give a broader range, to about 56 700 kind of a range. So while there could be a short covering bounce, the conviction for that is still stronger on the Nifty. So yes, there's a range on the Bank Nifty which is 55 500 on the downside, and on an immediate basis about 56 500, 56 700 on the upside. Either side of that range breakout will decide the near-term trend. For now, play the short covering bounce on Nifty rather than the Bank Nifty.
And what would you go ahead and buy today, Kush? Topics?
I'm glad when you have the conviction of asking for buy calls, which I seem to concur with. Both the calls are buy. Partly the reason for that, Mahima, is because a lot of stocks like the index were on such oversold territories that it became difficult from a risk reward perspective to give a short call. So as far as the picks for the day go, both of them on the buy side. First is Fortis Healthcare. We had seen very good moves on this for the past 5 sessions. Last 2-3 sessions when the market was consolidating, this one had an up move. So yes, relative strength apparent, volumes obviously are thick. So on the upside, you're looking at targets of 867 and 886. On the downside, you've got a stop loss around the 825 mark. The second one is more of a reiteration of the weekly call that I mentioned on Monday, which is Sham Metallics. The stock did well on Monday. Yesterday also, it actually moved to 984 levels before seeing a sharp correction along with the markets, but comfortably above the stop loss, and it's already regained that lost ground that it had yesterday. So Sham Metallics continues as a positional bet for levels of 1018 and 1069. Your stop loss on this one is 920.
Okay. Anything on Puravankara that you're seeing?
Mahima, I reckon you want to mark Asian Paints because those numbers are out.
Okay, all right. I'll check that.
So I'll just briefly read out the numbers while Mahima analyzes them. So the revenues are at 88,939 crores and the net profit is at 1100 crores. I think our estimate was 1110 crores. So I think on the bottom line, it seems to be bang on in line with estimates. On the top line, 8939 versus estimates of 8988. So you would reckon even that is in line with estimates for sure. Now, is that a good quarter or is it an okay quarter?
It's a muted quarter. I mean, it's and that's largely what the street was expecting as well, because overall the urban demand is not picking up for them, and that's been a concern. Plus, they've been losing market share. So this was something that the street was expecting, and that has happened. And that I think we're seeing the slight uptick in the stock as well, from red to green, up almost 2%, 0.2% as we speak.
But not warranted necessarily.
But not warranted at all. So muted set of numbers, largely in line. I'm yet to see the margins.
Margins are at 18.2, Mahima.
So 18.2 is what was estimated. So that's again in line. 18.4, I think what was estimated.
Was estimated, yes.
What was estimated, and 18.2. But that's not bad, because that's versus 18.7. So not a big dip there. EBITDA at 1625. So that is also largely in line of what the street was expecting versus that of 1657. So numbers seem to be largely in line when it comes to Asian Paints. Kush, any call there? I mean, any trade that you're seeing on the charts of Asian Paints?
I don't know how many people trade Asian Paints. It's more of an investor stock, but yes. See, what's happened here is that with this result reaction, the early result reaction at least, the stock was, seeing a downtick for the last 12, 13 odd sessions. And right now it's broken that falling trend line. So from a very near-term perspective, that's a positive. But on the upside, you've got multiple resistances, at around 2450. And once that is taken out, you're looking at the 2490 kind of a resistance mark as well. So I think, as you also mentioned, maybe the results were, more in line than anything else. And resistance is just around the corner. If you have a position, continue to hold, and you might want to perhaps take some money off the table around the 2500 mark. Hasn't really changed the structure, or hasn't really moved the needle for me. The move that we are seeing today as well.
Even if you see the year-on-year performance, it's largely flat. 8,924 odd crores versus that of 8,943 crores in Q1 FY25. So no surprises there. Their other income has come down quite significantly. The raw material cost, which was a concern, has also largely been flat. So that's one of the reasons why margins are still in check. There's stock in trade, which has also not moved much, but overall changes in inventory is slightly inched up. Probably that's the concern, where margins have been slightly hit. Employee benefit cost has gone up slightly. In terms of finance costs, that's come down a tad bit. Depreciation slightly gone up. Other expenses also largely in line. So I think overall picture seems to be quite. Overall, even in terms of estimates versus YoY numbers, it's largely a flat set of numbers for Asian Paints, and this was something that we were expecting. But I think the interesting things that I would want to know from the management from the con call as well, which is at around 5:30 today, as to the kind of money that they've made from Akzo Nobel's stake sale. We would want to know as to what they'll do with that, plus the kind of competition that is shaping up in the paint space, right? So I think these are the two important aspects to know as to what's happening with Asian Paints exactly. But we're joined by Dharmesh Kant, Head Equity Research at Chola Securities, joining us now. Dharmesh, hi, a very good afternoon to you. You must have had the chance to look at Asian Paints numbers. What is your first reading looking like?
Yeah, the numbers are largely in line with whatever estimates are there. The better part has been the margin expansion has been there. So we were working at around 17.5% of an operating margin. It has come at around 18.2, which looks a tad better than what the expectation was there. And seems like the fixed cost element has not played up clearly in this quarter. Maybe next quarter that will be there. But net it's more of a neutral set of a number, not a very enthusiastic number.
Any sense of how volume growth could have been like, considering the revenues are flat almost, that should be largely on account of price hikes, not volume growth. Is the reading correct?
I think the volume growth has come a tad better at around 3.5 to 4%. And the expectation was 2 to 3% kind of a volume growth, so it's near to around 3% kind of a volume growth. So it's more to do with the volume growth and better, lower input prices. So that has helped the margins rather than the blended realization going up.
And considering Dharmesh, Asian Paints numbers have already come out, and this sets the tone for the entire paint space. What I gathered was that because they have more presence in the tier 1 cities, more urban-based demand impacts Asian Paints. Do you think the peers' performance will be a tad bit better, because we've seen Berger Paints seeing market share gains since the past few odd quarters?
Difficult to judge that at this moment. I mean, Q2 anyways is a washout quarter for most of the paint companies because of monsoons there. I think Q3 would be the litmus test for all the paint companies as far as the market share is concerned, and how the consumption goes up and the share of take. But going by the prima facie, whatever numbers are there, I think market will give a benefit of doubt to Asian Paint with these numbers, because essentially the margins have shown a better uptick, and volume growth is a tad better than what the expectation was. So with this kind of stock price movement, you can expect around 4-5% kind of a further uptick in Asian Paint.
Home decor categories has been a pain point for them earlier as well. This time also they've seen a degrowth because of overall household disposable income going down. Any sense there?
No. As of now, it's difficult to comment on that. Let's see the earnings call of the company and what the management has say on that. Then after recent call can be taken. But one thing the underlying fact which can be generalized over the overall economy is that there has been a slowdown in the personal consumption of most of the retail side. So that applies to even home decor and the home furnishing segment. So I think Asian Paint is also has been a victim of the same slowdown.
Okay.
Okay, Dharmesh, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Now, let's get in a management which has made it a habit of giving good growth and guiding to maybe more. That is KC International, Vimal Kejriwal, Managing Director and CEO of the company, joins us right now on the show. And the reason why the stock may not be too excited is because now the street expects this as the very least from them. Mr. Kejriwal, it's a tough spot to be in. You deliver good numbers, and yet the street is not excited because the street expect this and more from you. But tell us to your mind, did the quarter live up to expectations, particularly in the revenue growth? Because the bottom line growth was okay, margins are okay, revenue growth 11%, slightly less than what you anticipated, or in line?
So Neeraj, aisa hai, dil mange more. You can keep on asking more. Okay. No, I think what you said was exactly right. We have talked about a 15% annual growth. And typically Q1s have always been slightly lower. If you look at our Q1 numbers for the last 5 years, they've been around 19-20% of our annual numbers. And what happens is in this business, most of the people try to push as much revenue, as much supplies in Q4. So Q1 in terms of collections, in terms of revenue, always is slightly lower. This quarter, we were expecting it to do more. Let me be very honest with you. I think the continued problems of labor, which are now getting resolved, and also a little bit of payment issues in water, etc., that brought our growth down. Otherwise, I think we should have done 13-14%, if not 15%.
Got it. I mean, so one is the execution, two is the inflow as well, right? Your order intake was presumably down 27% YOY. Now, is this also something that gets resolved, or is it that after a very hectic last 12 to 18 months of order inflows, things are kind of slowing down a bit?
So let's just look at some of the numbers. Today, my order book is around 34,000 in order.
Yeah, agree.
And my L1 is more than 6,000. So in all, I'm sitting on 40,000 crores of numbers, orders, which I have roughly. Okay. This 6,000 also will get converted very quickly. Some of them should get converted in a week or 10 days, or maybe I think within the next 1 month or so. I think most of this will get converted into orders. Okay. So one is, I don't think we are worried about this part of it. The second piece is, yes, we have been seeing some slowdown in the order intake happening from the India T&D. I think more so because people are just trying to recalibrate, even the CE and everyone's looking at all the, where are the renewable plants coming, what are getting delayed and all that, what needs to prioritize, because people are a little bit struggling on execution because of volume of work. So I think there is some prioritization happening, and there's a huge queue of tenders and orders to be given. So I don't think we should read much into this right now. No.
Mr. Kejriwal, hi. Mahima also joining in. I was seeing the highlights of your con call, and I saw that your tender pipeline that you were talking about is roughly 1,800 billion right now, and that's divided into T&D as well as your civil, etc. So just want to get a sense as to how much of a conversion rate you're seeing from there, from that 1,800 billion.
So typically what happens is if you look at T&D, it will be anything. Earlier it used to be more 15 to 20%. Now the volumes are growing. So maybe 10-12% is what normally gets converted. So our T&D was around 90,000 is the order tender pipeline. So 9-10,000 more should come in, in the T&D piece of it. Civil and all that, the competition is very different. So I'll not be able to hazard a guess as to what will happen. But overall, we had said this year that we should have an order intake of around 30,000 crores. I think we are pretty okay with the trend line of what we have already got, the L1s and the tender pipeline. I think we should be able to achieve our numbers.
Even in terms of the Kavach space, you did mention that it's not growing at the pace that you wanted to grow, but you've said that there will be improvement going forward. What's the outlook like for that particular space?
See, the reason why I made that statement is that, there's too much of electronics in this business. And we are seeing some struggle at the vendor end in supplying everything in time. Maybe the business is growing too fast for their capacities. They had been waiting for quite a few years. So we are slowly seeing new players coming in, new capacities being added. So the execution will pick up, and based on that, the orders will pick up. Because what the railway is seeing is that the current orders are not getting executed at the required pace. So which is why they are holding back, I think in my view, some new orders. So of late, there have been some tenders which have been released. So there will be a pickup, not at the desired pace, but it is picking up.
Okay. Mr. Kejriwal, just a word ahead again on, I'm just taking the clock back to the order pipeline. And we know that the targets set by the government for FY30 are fairly strong. I heard you say that don't look too much into the first quarter, pull back because the eventual number looks okay. You expect FY26 ordering activity to be as robust as FY25 has been, or is it difficult to forecast that right now?
So, Neeraj, if you look at the global piece, global order intake, where I play, I think it should be there or maybe more. That is why we have increased the order intake target from 25,000 to 30,000 crores. Clearly, I think apart from India, where government has increased the target of renewables from 500 gigawatt to 600 gigawatt, and right now I think we have quoted for almost 19 or 20 NTPC renewable projects in our renewable business. So, for all of those projects, if they come up, you'll require large transmission lines. But apart from that, if you go to Middle East, especially Abu Dhabi, UAE, and Saudi, the number of tenders which we are seeing is just unimaginable. When you look at the tender pipeline, India is 30,000 crores, internationally 60,000 crores on the T&D part. So I think we are quite happy with what we are seeing, whether it comes from India or whether it comes from international market. I don't think it bothers us too much that way.
It is not an issue. There could be a quarterly change here or there, but the larger pipeline for now still seems to be pointing northwards.
Absolutely right.
Got it. I have one follow-up question, Mr. Kejriwal. Sometime back when we had spoken, you had said that while this is the best time of the business to be in your 22 years, labor issues certainly stood up. I heard you say that some of that is getting resolved. Is it conclusive enough, or is it difficult to say whether labor will cease to be a problem?
So I think there are 2 or 3 things which are happening. One is for the time being, I am seeing labor issue getting resolved. We had a 30% shortfall. Now it's come down to 10%. We were able to get a lot more people. Now, is that I'll say permanent trend line? I am not very sure. What has also happened is that from June onwards, you don't have any major festival. Okay, so Holi is behind you, Eid is behind you. So next, you'll see people going out maybe near Chhath Puja or something. So that's one part. We are still not very sure that has a permanent influx or no. But what is also happening is that we are also changing the way, let's say we are hiring people. We have started using aggregators, people like Quest and other people who have got, a lot of labor with them. We're also using a lot more large subcontractors who have their own dedicated pool, etc. And also at the end of it, I think all the EPs are realizing that they probably need to have more better living standards and everything for all the workers, etc. Why should the workers go back, etc. So I think a lot of things are happening, a lot of action is happening on 3 or 4 different fronts. And hopefully this should result in a sort of a permanent solution. And lastly, what I would like to add is that a lot of work is also happening on mechanization and automation. So with volumes growing up, do we need to grow labor in the same proportion, or can we, some way use equipments to increase the productivity of labor? Whereby, let's say I use a plastering machine. Instead of having 10 masons, maybe can I use them with 4 masons and a plastering machine? So they can take care of the increased volume. I think a lot of steps are happening at various levels. So I think we are finally seeing some light at the end of the day on the labor issue.
Okay, Mr. Kejriwal, thank you so much for giving us those insights, and thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you for having me. Thank you. Bye.
All right. With that, it's time to slip into a very short break, but we'll be right back, bringing you all we've heard on the street today. So do stay tuned to NDTV Profit.
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the expert.
Back with India market close right here on NDTV Profit. The markets seem to be doing okay thus far, not buckling down after having a bit of a pullback. In fact, trading at the high point of the day, which is actually a really good sign. The market breadth is the real barometer and looking very, very solid. Now, before we talk more about that with our experts, let me get in Somit Sarkar, my colleague, who joins in with all the chatter from the dealing room. Be quiet. Somit, what are you picking up this afternoon?
Multiple stocks remain in focus. Firstly, it's REC dealers indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been buying this counter. Now, one of the reasons is that the selling is most likely over in this counter is what dealers are indicating. Valuations are cheap and earnings growth is expected to be much stable, aided by recoveries. Couple of other stocks, that is Jindal Stainless and Shree Cement, and dealers are indicating that large HNIs are taking a pair trade here. They are buying Jindal Stainless and selling Shree Cement ahead of the Q1 numbers. For Bharat Electronics, overall for the defense space, if you look at today, there is some profit booking that we are seeing in trade. For Bharat Electronics specifically, dealers are indicating that there are buy flows at lower levels for this counter on expectations of strong management commentary that is expected on the earnings conference call that will be held tomorrow. For updater service, dealers are indicating that there are buy flows on DI desk in trade today. And lastly, when it comes to Jio Finance, dealers are indicating that the company is, in fact not indicating, it is pretty much known on the exchanges that there is a board meet tomorrow for fundraise. But now what dealers are indicating here is that the promoter family might look to infuse funds in this company. They will look to increase their stake from current 47% to around 51%. So around 4 to 5% is what they are looking to increase, and the fundraise could be as much as 10,000 crore rupees from the Ambani family, that is the promoter of Jio Finance, and this could be done at a price range of around 320 to 325 rupees. So keep an eye out for Jio Finance. The stock is trading around 4% higher. The board meet is tomorrow, and most likely the promoter family will look to infuse funds in the company.
Okay, very interesting. Sumit, the other thing is we did this management today in KYC, Sterlite Tech.
Right.
And there is a bit of a news flow around that as well.
Well, Sterlite Tech has been in focus. There is a lot of institution buying interest. Now, one of the buzz on the street was that they might have some deal with Starlink, and that's what the management also confirmed.
Starlink?
Yeah. Yeah, and that's what the management also confirmed in the interaction. But apart from that, there are other multiple news flows that we have indicated earlier which have come to be true. Firstly, on GAIL, we indicated yesterday that there could be a volume guidance cut that the management could do. And yes, today in the conference call, they did cut their transmission volume guidance to by around 4%. Apart from that, we did indicate about Adani Power that there might be some positive corporate action, and yes, today the announcement has come in where the company will be looking for a stock split on August 1st. For Power Industries, on July 25th, we indicated that there is buy flow on expectation of strong Q1 numbers. The numbers have come in, the stock was up 10% in trade, and yesterday we did also indicate about Hind Rectifiers that there is buy flow on PMS and HNI desk, and the stock has hit to 20% upper circuit after the strong numbers and a fundraise announcement that has come in.
Okay. Certainly keep an eye out for a bunch of those 20% for Hind Rectifiers. That's something for people who missed out. So I mean, just extend this a bit, but for people who missed out on what the dealing room sources were talking about Hind Rectifiers, what was the khabar and why is it that the stock has rallied 20% today?
So yesterday there was a dealer buzz of strong buying interest that we're seeing on the HN and the PMS desk on some positive announcement.
On Hind Rectifiers.
On Hind Rectifiers. And today the company has come out with the Q1 numbers, which is pretty much on the stronger side, and they've also announced a fundraise from the promoter side of around 27-28 odd crore rupees. This two announcement has led the stock higher at 20% circuit.
Interesting. Thank you so much, Somit, for giving us all those details. We're also joined by Mr. Chokhalingam from Economics Research joining us now. Mr. Chokhalingam, any quick view on Hinzing that we were talking about? Hinzing or Hind Rectifiers? What were we talking about? Hind Rectifiers.
Hind Rectifiers.
Hind Rectifiers. Any quick view there?
No, certainly. I've been knowing this company for more than 15 years. It's a great value company, deep value, lot of investment, good management. But I think it has played out now by almost rising 150%. It's a fairly priced now. That's my view.
Yep, 20%. So, Mr. Chokhani, I'm just trying to understand. Sorry, just in case I missed it. Would you be a buyer into this now? Because the point being, unlike some of the other companies in this space, right, transformers and related aspects, Hind Rectifiers hasn't had the rally that some of the others have had. Are the numbers strong enough for you to go out and buy the stock now after the 20% up move?
No, by nature, I will not take that kind of risk in small cap because we have seen even if fundamentals are great, a stock like BSE came down 60% when the fundamentals were improving. So I would never take risk of buying after the stock nearly triples or more than doubles unless there is extraordinarily appealing further valuation comfort, which is missing at current price for in the rectifier.
Got it. Okay, Kush. I'm tempted to ask you, I mean, though Hind Rectifiers is on a 20% circuit, so nobody can buy it today, but a move up, which is not very usual for Hind Rectifiers, right? You don't normally see the stock do the kind of move that it has. So a word on Hind and a word on some of the other transformer sector related companies, maybe a TRIL, maybe a G, Vernova, TND, or any of the others, but Hind Rectifiers in particular.
If you just dial back the clock a little, I think, in 1st April, the stock was languishing at about 800. So with today's move, it's more than doubled. If I look at it on a daily setup, on weekly setup, it's actually now at overheated territory. So definitely the risk reward ratio not favorable for buying at the current juncture. But because the stock is at upper circuit on the back of very high volumes, I wouldn't advise an exit as well on this. You might just want to give it a day, see if there is another flip to it, another circuit to it, or at least in another case, at least some more upside tomorrow as well. So hold on to it. Keep a trailing stop loss near the 1650, 1660 zone. No fresh buying suggested. As far as the other stocks go, I think GE Vernova TND. This is the one stock that has actually had a fairly longish period of consolidation. You did see the stock and attempt a breakout 3 sessions ago, but that fizzled out. But that is more so in line with the markets. Today, on the back of good volumes, taking support at the 20-day moving average, the stock has rebounded. I'm more constructive on GE Vernova TND. If you want to take a fresh trade on the upside, look for targets of 2650, 2800 as well, and about 2380, the 20-day moving average will act as your stop loss. So risk reward ratio fairly favorable.
Okay, now it's time for our stock of the day segment, and Paradeep Phosphates is in focus. The stock has been buzzing on the back of its first quarter earnings. My colleague Varsha joins us with more details on that. Varsha, what are you picking up and why is the stock buzzing? It's up 8%.
Yeah, thank you so much for that interesting move. When it comes to Paradeep Phosphates, this is on the back of Q1 FY26 numbers that the company has posted. If you see, revenue was up almost 58%, but the move has been in EBITDA. So EBITDA is, if you see the margin, EBITDA margin stand at around 12.4% versus 6%. Now, other income and of course lower tax have aided net profit, but the rise in prices of DAP, that is diammonium phosphate, has led to the growth in sales because of the price surge in DAP. A company has seen a good amount, or rather good growth when it comes to sales. And of course, if you see the EBITDA margin, so EBITDA margin impact that you're seeing is led by the operating leverage. The fixed cost has not gone up much, but your revenues have surged by 58%, and that has led to the positive impact of operating leverage, and that's what we are seeing in the EBITDA margin impact. Company, if I want to talk about the backward integration program that the company has, backward integration is a key driver for the margin expansion that the company is seeing, and management confirms the sustainable margin improvement. Also, the new sulfuric acid capacity online. Their new sulfuric acid capacity will come online by Q3 FY26, which is at 1.9 million tons, and this will lead to expansion in margins because of the backward integration programs that the company is doing. Also, the phosphoric acid capacity is expected to reach to 0.7 million tons within 2 years. Onto the margin guidance, they are expecting EBITDA per ton guidance of rupees 4,500 to 5,000 rupees, and the expansion in EBITDA is expected because of the various capacity expansions company is leading to. Lastly, on the analyst recommendation, there are 3 buy, 1 hold and 0 sell with a return potential of negative 28.4%. But overall, if you see, a lot of fertilizer companies and even the agrochemical companies which will be posting numbers going ahead, you will see good amount of growth considering the volume growth, and of course good monsoon which we are seeing right now is also one of the reasons why you're seeing the rally in the, or rather I would say good financial prospects for these fertilizer companies.
Tata Chemicals looking good as well today. Thank you so much for that, Varsha. Paradeep Phosphates definitely a stock of the day, but that's based on some very strong numbers. Some other winners this afternoon that have continued from the morning actually. PNC Infra, Apar Industries come out very, very strong, 13% up. Indigo Paints, but I want to pull up Asian Paints just once more. I know we've talked about it a fair bit, but the comeback of Asian Paints is what I find very interesting, beaten down for quite a bit. Kush and Chokha, very good afternoon to you. G. Chokalingam, I'm going to come to you first, specifically on the chemicals pack, chemicals and fertilizers. Let me club it into a slightly larger kind of a piece. Are you seeing a more sustainable recovery here?
In chemical, I doubt, but fertilizer stock like a Paradeep, yes, to some extent. Because one has to understand the fact that phosphatic fertilizer in the country is perennially deficit. And there are only 2-3 listed companies which make phosphatic fertilizers, basically Paradeep Phosphate and Coromandel. And as I said, for decades we are in deficit, and Paradeep Phosphate has got access to backward integration because the inputs, 90% of the inputs, more than 90% of the inputs are imported. So whereas this company has access to one group company abroad. Of course, valuation is slightly stretched, and but still one can hold it for two more reasons. Again, this year monsoon is good and the crop area is increasing. And second, the application of fertilizer also, if you see, the phosphatic fertilizer is perennially deficit in Indian cultivable land. And third, the September quarter is normally the best quarter for this kind of fertilizer company. So therefore, it's a good to hold.
You add Deepak Fertilizer in that list, just the numbers that have come in right now. So a quick review, possibly we've not got a chance to look at the details of it, but the stock 5% up on a spike there. Profits up 24.5% or 243 crores is what they've clocked. For the revenue, for the quarter, revenue is up 16.5% at 2635 crores. EBITDA is also up 10%. Margins have come off a bit, slightly, to 19.5%, I would say nearly flat. But Deepak Fertilizer doing okay. We'll wait to see the internals. But when you're talking about fertilizers, Chokha, is Deepak making the cut?
Not really. It is not in that phosphatic fertilizer. It's a fairly priced. It's a great company, no doubt. I think the valuation is fairly good now.
So the valuations don't give you that much confidence. Kush, what about you? Anything from the fertilizer pack that you're liking this afternoon?
First of all, a very happy birthday to you.
Thank you.
I am surprised how Neeraj and Mahima have allowed you to come in the studios. You should be taking a day off. I know that
you missed all the excitement in the morning.
And you missed the gold bracelets in the morning.
Yeah.
The return gifts, I heard.
You're mixing me up with Oprah. That's a different show. A different anchor.
Hope you have a great day and a fabulous day ahead, Tamanna.
Thank you.
As far as the stocks go, I think among the pack that we were discussing, the only one that stands out for me is Coromandel. Paradeep over short. Deepak Fertilizers has multiple resistance levels, at the level at which it is trading and maybe just higher. But the very clear signs of accumulation on Coromandel and the support and the rebounds that you've seen in the last few sessions, very encouraging. There is a resistance, I will admit, around the 2500, 2550 zone. But once that is taken out, you could see the stock zoom to 2700 levels as well. So it's gone through a long period of consolidation, attempting a breakout. I think if there were market support, the stock would have already given you that breakout. So keep the stop loss at the 2400 mark. On the way up, 2700 and higher levels are your targets.
Kush, anything on Puravankara that you're seeing? Last 6 months, the stock has not done anything. Today, the stock is flying in trade. If you can try to pull that up, 13% as we speak. Anything that you're seeing on the charts, and do you think this momentum can sustain?
So I wouldn't bet too big on Puravankara. As you rightly said, the stock's actually seen a downward pressure for some time. The volume on the way down was waning off, right? So there was some breakout or an uptick imminent anyway. I'm sure this must be on back of news, perhaps even results. I haven't caught that. But immediately, if you see, there is a resistance of the 200-day moving average near this 305, 308 mark where the stock made the high today. So a follow-through move, and if it takes the stock above the 308 mark, then I could just, I could say that yes, perhaps the tide has turned, but there isn't anything much right now suggesting that there is a further up move that could come about. So 308 remains a critical level. If you have a position, continue to hold with a trailing stop loss near the 288 level. And if 308 is taken out, you could see further high upsides. But if not, then I think perhaps a sideways consolidation at best.
Okay, and Mr. Choklikam, real estate has always moved against the tide. If the markets are up, it's generally the counter that takes a beating. Anything specifically you're liking in the real estate space? We saw Kolte Patil come out with earnings. The stock is tanking in trade today. Any particular stock in the real estate space that you're liking?
A couple of points before recommending any stock. One, many real estate stocks already played out in a big way. And second, all of us know that in the last 3-4 years, whether you take land prices or apartment prices, they've gone up substantially. So therefore, there would be some pressure on the demand. Having said that, I would still recommend strongly stock like DLF. That's one stock which I like most because it has got a lot of land bank. There is a potential to unlock value from the land bank by developing them. and they have been doing quite well also.
And what about Varun Beverages? The stock is, seeing an uptick since the con call started, up 4% as we speak, right? Almost 5% now. Just want to get a sense. I think something that the street liked was that the volume degrowth was at 3% versus that of expectations of a degrowth of 5%. Plus, the international business has done well. The Morocco subsidiaries also started production for their Cheetos, and that's something that will augur growth going ahead in terms of top line as well. And now almost the entire capex is put to use, and that's something that will start playing its part. What's the view like here, and if somebody wants to enter, is this the right time because valuations are still not cheap?
One can wait. I mean, of course, the historical track record has been phenomenal, no doubt. Stock also corrected, but one can wait for proper, more appropriate day, because as you mentioned, the stock is already up 5%. And of late, the market is highly volatile, and it is likely to be volatile at least for another couple of weeks till successfully the agreement is signed with US. So therefore, I would suggest hold. If there is any good day, in terms of even 3-4% correction, one can accumulate.
Okay, NSE not listed, but a number that is widely tracked by the street, and maybe you can look at BSE as a proxy if at all. But the margin number is what struck me, Mahima, as I was looking at it. Profits, of course, up 10%, total income up 9%, contribution to Exchequer at 14,331 crores. Operating EBITDA margin has gone from 74% to 78%. I mean, I know this is an IPO that is much awaited, a lot of interest, because there are more than 1 lakh investors who have unlisted shares right now. And let's pull up BSE as well to see if something is happening there. But NSE just telling you about, the numbers just telling you about how lucrative this space is, and there's just a 2-horse race as of now, only one of them is listed.
Absolutely, and I think the kind of margins uptick that is seen, it's not something that we've seen in BSE before, from a 74% to a 78%. It's quite a significant margin uptick, and we'll have to wait and watch out for as to when the IPO comes, how the subscription pans out, because overall it's been, the markets have been muted, and we've not seen the kind of flows and the kind of listing day gains in a lot of these counters, but NSE is one of the IPOs that will be most widely probably be subscribed and watched out for, definitely. Now shifting focus to L&T, because that's poised to report a strong quarter with expected revenue growth of around 14% and a 22% rise in net profit as well in Q1. Anushi joins us with more details on what you can expect from the L&T earnings.
Right, so I'll start off with the basic numbers first. Now, if you are talking about the headline numbers, revenue is expected to, as you mentioned, see a 14% of a growth. Margins mainly remaining flat at the levels of 10% or odd, so while net profit may see about a 22% of an increase. This 14% of an uptick that we are looking at revenue is mainly to be driven by the domestic business, and that's the kind of outlook that we are seeing according to the coverage that we have so far. Even if we look at the order inflows, that will be driven primarily by the power transmission and distribution business, along with the business buildings and factories sectors. Now, there was a new order win today as well in the hydrocarbon business from the Middle East segment. So commentary on that front is something that we should be looking out for. In fact, if you look at the order inflow growth, there are expectations that this may see some tepid sort of a growth, considering deferred domestic tendering which has taken place, while EBITDA margins will majorly remain flat. Now, what we should be watching out firstly is the order prospect pipeline. This is in between both the domestic as well as the international business. How that pans out, if they've increased the guidance towards that front, is something that we should be watching out for, especially in the Middle East segment. Execution timeline for both of these metrics in the domestic and international segment also on the watch list. Also, along with that, how improvement in projects and manufacturing business will drive the EBITDA margins forward in the subsequent quarters is something that we should watch out for. Well, just to reiterate the FY26 guidance given, now the company did say that they see about a 10% of an increase in terms of their order inflows, while revenue may see about a 15% of a growth, and core margins, that's the project manufacturing margins that we're looking at, are expected to remain in 8.5% of line, while net working capital to revenue ratio should stand anywhere between at 12%. So this is the overall picture that we are seeing for L&T.
Okay, L&T up before its numbers are coming through. That's an